Want to say hello, hello, welcome to the room. It's an education room. Guys, do me a favor, sit tight 1 second. I'm going to unplug my headset and untwist this cord. And we are back. Guys, this is an educational room. Educational room, educationary room. We're just going to make up words. I don't call trades in this room. What I do is I talk about advantages. We talk about those amazing T3 indicators, how to use them to recognize advantages, turn those advantages into trades. But I will, under no circumstances, give trading advice, nor will I tell you when to enter or exit a trade. My job is to teach you to read your indicators so you can make good decisions about entering a trade. Before we do that, I have one stop every morning before I ever think about pulling the trigger. That's news. Some days it's huge spikes, some days it's a dud. You never know what you're going to get. It's like a box of chocolates. So every time I see a high impact news release, they happened at 8:30. I sit on the sidelines. I say, you know what? I don't want to step in front of that emotional freight train. Somebody with a ton of money could be doing stuff that makes the market go crazy and spike and jump and reverse. And man, I'm just not in it for that. I like my trading to be calm and I like it to be controlled. And I like to be in control. And high impact news can remove that from me. Maybe I have a problem with control. I made a picture this morning, and it's kind of funny. I think it's funny. It may not be nearly as funny as I believe that it is. But I was like, how do you sum up trading in only 2 words? And it is no, 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 yes. And if you can wait for the yes, if you can wait for your rules to be true, trading becomes pretty effortless. You know exactly where you're getting in, you know exactly why you're getting in, and you know exactly how you're going to manage it because you got in, guys. That's having a plan. And a plan that I provide you teaches you to read your charts. What we're going to do in this room is we're going to use a checklist with only 3 rules on only 2 charts. And I say, oh, we're going to keep it simple. We're going to keep it simple. Guys, remember, if you're brand new, you've got to learn a little bit of verbiage and you've got to focus on these basic concepts. But if you focus on advantages rather than the money you're trying to make, if you focus on the process that tends to create that money, trading doesn't have to be stressful. It doesn't have to be nerve-wracking or adrenaline-inducing, guys. When you begin to recognize advantages through reading your indicators, those advantages become your trade. In chart reading, waiting for those advantages to come true is about 90% of your day. There is a lot of sitting on your hands, a lot of doing nothing, a lot of, for me, playing solitaire and Scrabble off on the sidelines. That's 90% of my day. 10% of my day is actively trading. And honestly, I would say it's more like 95-5. But you're going to understand through your chart reading where the market is likely to continue. This will be used for entries. You're going to understand where the market is likely to go. This is going to be used for targets, and you're going to understand where the market is likely to stop. And that's going to help you. That's going to help you know when to not trade. Madafaka, I don't even have a silver chart, man. I don't even have a silver chart. I don't have a daily time frame. I'd be happy to build it later after class, but I'm not going to do it right now. Silver is forbidden. Guys, the margins on silver are crazy right now. And if you're with Nexgen Pro Trader Funding, it's banned. Most prop firms are banning it because of the volatility right now. You want to cop physical today. I don't know what that means. So maybe there's a generation gap there. Want to cop physical bars. Still don't know what that means, but that's okay. Catch up with me after class, motherfucker. I'll be happy to build. I'll be happy to. Oh, bye. There we go. Generations, right? I'm that old guy. Get off my lawn. See me after class, motherfucker. We'll talk about it. I don't mind building it. I'm just not going to do it right in the middle of the classroom. Guys, we're going to learn to read our charts. That's the whole goal. There's this thing that happens in the market. And this is why I teach trend trades in here. So trends get established, whether it's going up or down. There's almost always a fight somewhere within that trend, and then the trend tends to resume. And whether you're using Nexgen or price action or anything, this holds true. This is a real concept. Everybody has heard of defining a trend, higher highs, higher lows, lower highs, lower lows. Guys, trends are a very real thing. So are the fights. The methodology that we're going to talk about today, whether it's NinjaTrader or TradingView, is designed to pinpoint right where that fight is most likely to be lost by the people that started it so that the market can bounce and continue in the direction of an already established trend. On NinjaTrader, it's going to look like this. You'll be using dynamic Renko bars. On TradingView, it's going to look like this. Very similar, trend, fight, resume. You'll be using minute bars. I teach both. I always begin with NinjaTrader. But the bottom line and the most important thing is that you have rules. I do a lot of research outside of this room. I'm like, why do traders fail? Why do traders fail? Why is trading so hard for people? And guys, the consensus is, not my opinion, but the consensus is that 94% of traders fail because they simply don't have a plan to follow. They don't have rules to follow. They're not focused on having an edge when they enter, but rather they're chasing the money that trading can provide. So what I do is I give you guys very clear, concrete rules in this room. And more importantly, we break those rules down individually, and everybody in the room has the ability to simulate, just to practice. Hey, Mark said this is what a trade looks like. I'm going to give it a go. And if you take your trade or your question and you post it in this room, you get a private session with me. So you guys that are kind of new in here, and I see some new names in here, welcome to the room. Guys, you can take a trade, you can practice, you can post, you can get feedback, and I'll give you everything in my arsenal with these indicators to help you read them. And keeping it simple tends to be the path of least resistance. So when I talk about simplicity, for both platforms, I give you what's called the KISS plan. And my disclaimer is that there are probably 1,000,002 ways to use the software to your advantage. I teach you the core, the base, the foundation. And the KISS plan is a stepping stone in your learning journey. And it is designed, and it's intentional, it's designed to teach you how to read your indicators, to stay focused on 3 advantages. And the trades within the plan are designed to optimize your chances of success, which means that before Nexgen ever put this out and gave it to you, we have done countless hours of study, of simulation, of live trading. We have verified, validated, and proven that the patterns within this plan can typically win more than they lose. That's what creates an edge. And when you have an edge, you don't have to know what the result's going to be because you know that over a series of trades, you're more likely to win than lose. And then management comes in and does great things. So the KISS plans, whether it is NinjaTrader, whether it's TradingView, is designed to keep you focused on advantages and optimize your chances of success. You will craft a plan tailored to your personal goals based on your experience reading the indicators. This is not the end of the road for you guys. This is the 70 feet of concrete that you're going to build your trading skyscraper upon. So learn the rules, learn the basic rules, learn them individually, then piece them together. Practice, practice, practice. And what Cav said, welcome new traders, heads up, if you want to learn, ask questions and post your trades. If you have a question and don't ask it, I can't give you the answer, guys. Don't hope that I stumble upon it. Just interrupt. You can't interrupt. This is your classroom. Type in the room. Hey, Mark, I was wondering about XYZ. We'll stop, we'll pause, we'll address it. We'll make sure that you walk away with answers. Simplicity pays dividends. Whether it's NinjaTrader or TradingView, guys, it's just a pattern. What we do is just a pattern. That's it. It's repeatable, it's testable, it's provable. So you've got to learn that pattern. What's it look like to have my rules met? That's the second gift that I give you guys. It's a spreadsheet. In the spreadsheet, and let me drop them all in here right now. I can't remember if I did it or not. The spreadsheets that I give you, one for NinjaTrader, one for TradingView. Make sure you know which platform you're trading. are just visuals. Whoops, that didn't go in the room. 1 second. I swear I can do this. Um, it's the visual of the pattern that's being taught. So in the NinjaTrader version, it's each rule individually. It's pictures from clients showing the pattern, management, patterns that repeat themselves, a place to build your plan. And the same is true if we look at the Trading View Journal, trend trades, momentum trades, management, no more trades, places for your pictures as you build your plan, as you grow with the software. And then again, a trade tracking sheet, guys. And the trade tracking sheet is every bit as important as posting in the room. Because when you post in my room, you get feedback. And if you go back and study what was said about your trade, about your efforts, about your entries, about your exits, about your reads, guys, you're going to recognize the things that you're doing amazing, but you're also going to recognize where maybe you need to focus your energy to stop taking avoidable losses, guys. And that's what the feedback's going to do for you. So the path of least resistance, getting where you want to be, ASAFP, guys. Post your trades in the classroom. You can't post too much. The record is 77 pictures. Every picture got feedback that day. The second thing, track your progress. Take a lot of pictures. Annotate charts, guys. When you write on a chart, what you're doing is you're creating a connection between what your eyes see and what it means to you in terms of advantages, guys. Annotation is key. And if you look at my library here, did we get 21,000 yet? No, we are 20,925. I am just shy of 21,000 pictures, guys. I take pictures every day. I annotate every trade that I take, typically 7 or 8 pictures throughout the duration of a trade. The more you do that, the easier trading becomes, the quicker your chart reads become. So let's look at the basics. We're going to start with NinjaTrader. Are there any questions before we start looking at stuff? We good? Ready? Everybody's exciting? Exciting. You are exciting. Excited. Man, I'm wound up. Look out, guys. For those of you that are new, and I see some of you in here, Ayote, and who else did I see in here? Someone snuck in. Guys, this is day one. And I don't care how experienced you are in the markets. I don't care how successful you are in the markets. You're learning a new language when you learn new indicators and you learn the patterns. Give yourself a little bit of grace. It can feel overwhelming in the beginning. So what I do is I try to mitigate that a little bit by keeping it as simple as possible. And when we talk about NinjaTrader, we're talking about 3 rules. That's it. When a rule is true, it creates or proves an advantage to be present. So rule number 1 gives me the advantage of momentum, a market that's going to be difficult to stop. Rule number 2 says that there's nothing in the way, that I have room to trouble, and that's what we're going to call a clear path. And these two, my gosh, these two are enough to build a plan. You could build an entire empire on momentum and path. Rule number 3 is going to define that beautiful entry point. Guys, give me a Y if you can hear me, please. Pete may need to feed the gerbils. Anybody? Nobody? Yep, okay, smartass. I love it. Ron's the only person that can hear me? Okay, thank you. Andy can? Cool. So Pete will know. He'll have to reboot, and hopefully he'll be able to get in. I'll reboot my microphone real quick. That's about all it is. Mute it, unmute it. Hopefully it gets it. Guys, if you ever can't hear me, let me know. I want you to get all this great information. Sometimes our internet glitches. Sometimes just Discord doesn't want to play nice. If you let me know, we'll figure it out. If Pete comes back and he still can't hear, I'll reboot on my end. Guys, 3 rules. Only 2 charts on NinjaTrader. There is a large chart and there is a small chart. How's that for technical? Your large chart is a very slow moving chart. It's difficult to see change on a large chart. It's a broad stroke of a brush, guys, and it shows the overall opinion of the market. And it takes 1 bar. The most current bar will define direction, letting you know which way the trend is going so that you can choose to go with it. It'll define the momentum through rule number 1, letting you know that you have that advantage in play. And it'll also define areas, letting you know whether or not you have that clear path. Rules 1 and 2 for the high probability trend trade are met on a large chart. And there really isn't any reason as a brand new user to go look at a small chart if the rules aren't present here. But if they are down here at the very bottom of that bar that's giving me my rules met, and it could be any of these bars, this is where the magic happens. This is where that fight that I talked about happens. And inside of this one bar with the advantages in play, if this is going to be one of those 70 to 80%, one of those trades that work, you will see a retracement, which is a small move counter to the underlying trend. That's how the trading gurus defined it. You'll probably see a bounce off of an area inside of triggers. That's the language for rule number 3. And you'll see continuation in the direction of that trade. You'll see all of this in that one bar. In this bar, nothing changes. The advantages are still in play. The only thing you see is a little tail sprouting. We're going to pinpoint right where that tail is most likely to form using rule number 3. This is going to allow you to reduce your risk. This is going to allow you to maximize your profit potential. We use these two charts because Novak men stink at analogies, but we like to use them anyway. It's really more of a metaphor, I suppose. Who are you trading with? Who are you trading against? When you look at your large chart, I want you to believe that that chart is controlled by the men and women with the power to create a trend, by the men and women with the power to establish that momentum we're looking for, and by the same men and women that react at the key areas that you will know about long before you get to. Large chart wins, large crowd wins, and the methodology is designed to keep you in their good graces. Your small chart, your entry chart, this is where we see the small crowd. These are the fighters, guys. They are brass knuckles and switchblades. And when these folks say up, they say down. And when they say down, the small crowd says up. They like to push. Well, the cool thing is that they lose like 70 to 80% of the time typically when the large crowd rules are in place. So we're going to use rule number 3 to pinpoint right where their fight is most likely to be lost. And we're going to do it with such a level of accuracy that you will wait for the market to come to you with a limit order right where their failure is imminent, and that will become your entry for the highest probability trend trade. When we're talking Ninja Trader, we're going to talk indicators real quick. Areas is a generic term for a horizontal line on your chart. Areas, they do all have names. Divergence highs, divergence lows. Anytime you hear divergence referenced in this room, it means that there was a loss of momentum right at that pivot, and you'll see an exact line in the sand where that momentum was lost. You'll see it as magenta from a high, cyan from a low, hot pink, baby blue. You'll see Fibonacci resistance, what Nexgen's been known for the better part of 30 years. You'll see Fibonacci support, the blue lines. You'll also see yellow 1-to-1s and a mid-band. And guys, anytime, I made this picture yesterday, I think this is a good one. Anytime you're in an uptrend and price reaches a divergence high, price reaches Fibonacci resistance, or price reaches yellow 1-to-1s, you can say the market has reached an area of resistance. Resistance is a ceiling. And when the market is in a downtrend, if the market reaches a divergence low, if the market reaches Fibonacci support, if the market reaches a yellow 1-to-1 in that downtrend, the market has reached an area of support. Once again, this is a blanket term. Support is like a floor. So we're going to use areas to define where the market could stop and reverse. We're also going to use areas to define where entries come from. Because my favorite phrase that I have coined in this room is that areas are bouncy. If you see a horizontal line on your chart, I just want you to say before the market ever gets there, that line could create a bounce. It may create a bounce. It might create a bounce. It has the potential to create a bounce. And if you do that, you'll be less apt to trade directly into them. We're also going to use triggers. Triggers is just a cool sound and rodeo way of saying averages, moving averages. There are small triggers. 2 solid lines work together to create them. These are a fast moving average. And then large triggers, 2 dashed lines work together to create them. These are a slow moving average. Triggers will first be used to define momentum through rule number 1, letting you know that that advantage is in play. Trigger lines will also be used in a little comparison against those areas of support and resistance to see if they have the potential to stop the market, reverse it, upset the apple cart. And then these large triggers will define right where your amazing entries are coming from. Triggers show up in everything. All you need to know is that these are small and these are large. When they're green, they're up. When they're red, they're down. And now we're going to break down the rules individually. And again, the money is awesome. I love money. I love winning. But there's a process that tends to yield results, guys. So if you're brand new, don't look for the trade. Look for the momentum, and then couple that momentum with the clear path. And when these two are present and obvious and provable and validated, then go define your entry, guys. And that is the recipe for the high probability trend trade. And when you learn this recipe, when you learn this pattern, this is a trade that you'll be able to prove. Don't take my word for it. You'll be able to historically go back, study this trade, and prove that it typically wins in the 70 to 80% range, which means that you have an edge. So we're going to do rule number 1, strong trigger lines. Easiest lesson of the day. If the background on your large chart, this is on your big chart, is green, the trend is up. My KISS plan says I'm looking for rules to be met for high probability trend trades long. If the background is red, I'm in a downtrend, and my KISS plan says I'm looking for rules to be met for high probability trend trade short. The trend is my friend. In an uptrend, when the background is green, both small and large triggers must also be green. If they're not, or if they don't agree with one another, or if they don't agree with the background color, you don't have rule number 1 met. That's a little safeguard. It's like a cheat code. So in an uptrend, on the most current bar, so let's go to the most current bar. Boom, I'm looking at the right side of my chart. In an uptrend, in order to have rule number 1 met, small triggers must break above and away from the large triggers. There has to be space between the two, and right here on the most current bar, I can say without hesitation, I have strong triggers. And when I have strong triggers, the odds are favorable for the market to continue up. And in a downtrend, my colors match. The small triggers break away from the large triggers, which are angled down and widening. And it's the space created between the two that lets me know the odds are favorable for the market to continue down. And guys, it doesn't matter if it's a lot of space. It doesn't matter if it's a little space. There are no grading criteria for momentum. It either is or it is not. Separation is strength. And if there is no separation, if my small triggers have worked their way back inside of the large triggers, we're going to call those triggers weak. When I have weak triggers, anything can happen up or down. So it's the difference between the odds being favorable for the market to continue in the direction of the trend and having to say, because the separation is no longer present, anything can happen up or down. And guys, with weak triggers, very often you'll see reversals even from the middle of nowhere. With weak triggers, very often you'll see key Fibonacci areas are more likely to hold. Weak triggers, right at a fib, right at a divergence low. There's your reversal. No separation, the market continues down. No separation, the market continues up. No separation, the market reverses. Strong triggers can break areas. Strong triggers are what we're looking for. We want that advantage, and that's when we know it's time to buy or sell a pullback on an area on the smaller chart. We'll come back and look at that tail after we do entries, and we'll see what it said in the moment. Is everybody good? Strong triggers lead the way. Separation is strength. Learn that phrase. I use a lot of language to make it easy to recognize. Separation is strength. Momentum is only one of 3, guys, and when momentum is there, it's awesome, and it's hard to stop that market. But one of the things that can is what we call a termination condition. Those are those likely to stop areas. When there are none present, there's room to profit targets. When there's room to profit targets, we're going to call it a clear path. Um, Termination conditions are Fibonacci-based indicators that could stop the market, that may reverse the market, that could produce a bounce. Termination conditions on a large chart are horizontal lines that the market has reached. Horizontal lines on a large chart can stop a market. And this is where the large crowd is most likely to make decisions. This is where the buyers are most likely to buy and the sellers are most likely to sell. It's where profits are most likely to be taken, and even more so, it's where fights between the buyers and sellers are most likely to happen. Guys, you will find that the people in charge respect the areas because the people in charge created the areas. Fibonacci is just a reflection of the psychology in the market. It is nothing more than a projection of what has already happened, and the large crowd made it happen. So we're going to define a termination condition first. An area that may stop the market, that may produce an untradeable bounce. It's also an area that may break, and we'll never really know what it's going to do. So we have to kind of submit that we're not in charge, that the market's in charge. So we're going to let the large crowd get to resistance or get to support. And that means that price reaches the area. So if we're in a live market, ooh, I crashed my NinjaTrader. If we're in a live market, let me bring that back up. We're going to allow our price bars to find their way to resistance. We're going to allow the price bars to reach Fibonacci support. And as soon as price reaches an area, we're done with price. We don't need it anymore. It doesn't matter. It actually becomes irrelevant. Your trigger lines, small and large, will tell the story. If price reaches resistance, you're going to ask yourself, where are my triggers? If price reaches support, you will ask yourself, where are my triggers? Guys, if all four of those trigger lines, both lines that create the small and both lines that create the large, remain below the area of resistance, that's an area that may reverse the market. That's an area that may create a fight that you don't want to be a part of. That's an area that may break. Since you can't predict the outcome, rule number 2 says absolutely no trades into that area, whether it be support or resistance. So when price reaches the area, we're counting triggers. And we're doing this not because it stops it every time. It's because more often than not, if price reaches an area and none of your trigger lines break, that area is more likely to stop the market and create a loser, which means that if rule number 2 is not met, you've lost your advantage. You've lost your edge, and it becomes just kind of a crapshoot. So this was before Thanksgiving, I think, last year. This was 36 instances where rule number 2 kept you out of a loser. 36 instances over the course of almost 12 hours where rule number 2 made sure that you and your hard-earned money weren't separated by trading into an area. These areas did break, but they broke less often than they didn't. So price reaches an area, no triggers, no trade. That's your phrase. If it's going to break, once again, your trigger lines will tell the story. So this is kind of the process of an area breaking. First, price reaches the area. Number 1, all of your triggers remain above the area of support. Support is defined as a termination condition. It could, it might, it may, it has the potential to stop and reverse the market. Since I don't know what the reaction will be, my rules say, sit on my hands and wait for the reaction. If it's really going to break, your small triggers will absolutely smash through that area. Let smash be a part of your vernacular. Their large triggers will lag behind. They're a slower moving average. 50% of your triggers are through, 50% are not. This is what we very cleverly call a 50-50 look. And with a 50-50 look and all that momentum, you can say to yourself, hey, this area has the potential to break because of momentum. But this still is not your best look for a breakout. And the plan that I give you, there's a trade, the 50-50 trade, where if 3 of the 4 trigger lines have made it below support, this is your best look for a breakout. That's the second trade in the plan that I give you. But you have to know the difference between a termination and a clear path to trade that effectively, which is why we focus on recognizing a clear path first. When all 4 trigger lines get below support, support is now resistance. Support is broken. Your path is clear, and your path remains clear until you reach the next area. Good morning. We got a new foster pup yesterday, so you're a bit all over the place. She looks like a fox. Trina, if you don't post a picture of that cute puppy, I think you're full of beans. I need a picture. How do you foster? I could never give a dog back. That's amazing that you do it. And I think you should call it trader. All right, guys. Termination, potential, clear path. All we're doing is counting triggers. This is your cheat sheet. If price reaches, ooh, I like that one too. If price reaches resistance or support and none of the triggers break, that's a termination condition. That's an area that could stop the market, may stop the market, might stop the market, has the potential to stop the market. There's no absolutes. If 2 triggers smash and 2 triggers remain below, it's still a bright red 2. Absolutely no trades. This is not your best look for a breakout. A lot of you are going to get tired of waiting for 3 and try to trade this one and have trouble. Guys, but it's when 3 trigger lines get through that area, that's when you have the potential for a breakout. That's when those medium probability trend trades can be taken, managed assertively. But your path is not clear, and rule number 2 is not met until all 4 trigger lines break through the area. And when all 4 trigger lines break through, your path is clear, and it's going to remain clear until you reach the next area. So when we're talking clear path, you can have a clear path when all 4 triggers break above an area or below an area. You can also have a clear path when an area reverses the market and all the triggers head the other way. And the easiest trades you'll ever take will have a clear path coupled with momentum, and you will define your perfect entry on that smaller, faster chart. Guys, this is the highest probability look you could ever take with the software. And now here's our sad trombone moment. Wah, wah. There will be times when your path isn't clear, guys, because areas are stacked. There will be times when they're not giving you the momentum that you need to even go look for those termination conditions. Guys, this is 90%. 90% of your day is spent sitting on your hands being patient. The futures markets trade on average of $220 billion hourly. The S&P exchanges about $174 million a day. The NASDAQ about 250. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. It's not imperative that you catch every tick presented in the market. It takes an overwhelmingly astonishing, how will I ever manage it, $400 a day as a futures trader over the course of 252 trading days to put you in a 6-figure income. It's not about making all the money, guys. It's about making the easy money. It's about making the high probability money. It's about leaning so hard into advantages that you feel confident and comfortable every time you pull the trigger. That's what the methodology is going to do for you, and it's going to build that solid foundation. So, review. Rule number 1 says strong trigger lines. The advantage of momentum. Your phrase is separation is strength. That is going to keep you focused on the absolute best outcome. Hold on. There it is. Rule number 2, no termination conditions. The phrase I need you to remember is that if price reaches and no triggers through, no trade. Rule number 2 is not met. Calm it, right? Sit tight. Wait for a minute. Relax. Rule number 3 has verbiage as well to define that perfect entry. And the verbiage is going to have you calling your shots. I'm going to use a limit order to buy or sell a pullback in an area inside of triggers. Learn how to say it in one breath. Memorize it. You will know where your trades come from before the market ever gets to your entry, guys. A limit order means that we're waiting. We force the market to come to us. We don't have to chase trades. We're going to buy or sell a pullback. A pullback is nothing more than that little fight by the small crowd when these guys say, nope, we're going the other direction. We're going to do it in an area because areas are bouncy. Fibs, midbands, yellow one-to-ones, horizontal lines can create a bounce. All right, guys, we interrupt this program for 32 flavors of cuteness. Oh my goodness, does look like a fox. Oh, Trina. There are no bad dogs. Beautiful, beautiful, beautiful. Yay! All right, add an area because areas are bouncy. We interrupt this program to bring you the cuteness. And guys, that area is going to be inside of those large triggers. So not only do we wait for the fight, we wait at an area, and that area is inside of triggers. It is so stinking specific, and it's just a pattern. And it looks the same every time. When the large chart says up, and the large chart has momentum, and the path is clear, you're going to wait for the fight. The reversal bar begins the pullback. Not the entry, just the pullback, the fight. You'll know exactly where the fight's most likely to go using the large triggers. There's 2 large triggers on your small chart, just increases accuracy. Somewhere from the top of the line to the bottom of the line. That's where the market is most likely to retrace. That's your retracement zone. But trigger lines aren't bouncy. Your entry will come from an area. Fibs, midbands, or yellow one-to-ones inside of triggers. So as the market's coming up and my fear of missing out is kicking in, I'm rooting for the fight. When the fight happens, I know exactly where it's most likely to be taken. I know exactly where it's most likely to be lost. I'm going to activate a limit order just above the highest point of support, and I'm going to taunt the small crowd to come get me. And if they do, I am in the highest probability trend trade ever. I'm in a trade that typically wins 70 to 80% of the time. I'm in a trade right from where the market is most likely to continue. And because you're going to use this methodology to define where the market is most likely to continue, you've also defined where the market should not go. And where the market should not go is past that retracement zone, beyond those areas within the retracement zone. And once you get 4 or 5 ticks below those trigger lines, you're going to cut ties with that trade. The advantage of rule number 3 is no longer in play. And no entries are taken from lines beyond the triggers. Because once you're there, you don't know if, when, or where that market is going to continue up. Futures is like eating from both sides of the buffet, guys, whether it's going up or down. First, it's an established downtrend. Then it's odds favorable momentum. And then it's a clear path. And then and only then do I come to my smaller, faster chart and I wait for the reversal bar. And the reversal bar says the fight is on, but it's not my entry. The trigger lines define where the fight's likely to go, but they're not my entry. The area within, guys, it's specific. It is accurate. It is so accurate that you'll wait with a limit order just below the lowest point of resistance. And if the market can push through everything good, you will have a stop in place right where the market should not go. And guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. When the rules are met, there are no bad losers. It's a good loser. It's a calculated loser. It's a loser that had an edge. But there's no reason to take giant losers. The methodology is way too accurate for that. No trades are taken from beyond the triggers in the KISS plan. And here's the plan. Here's the pattern. First, it's momentum. Then it's at least the potential to break. And then it's a pullback to an area inside of triggers. And this pattern from November looks just like this pattern from 2021. When the rules are met. Ooh, I like Penny. When the rules are met, the market is trading all the way up here. And a lot of you are going to say to yourself, there's just no room to make money. And you're right. There's not a lot of room to make money from 81. But the methodology puts you in at the area inside of triggers, which is pinpointing right where that tail is most likely to fail, or form, excuse me. And the methodology increases profit potential because you go from the 6 ticks of profit potential to about 26 ticks, $260 rather than 60. And because we wait for the pullback to the area inside of triggers, your risk is as small as it can possibly be while retaining the advantage. And in the KISS plan that I gave you guys, once you get a reversal bar in the direction of your trade, that stop placement is moved right below that reversal bar, which means it's not uncommon to see next-gen users take the perfect entry and maybe have 30, 40 bucks worth of risk on a trade. Same pattern, 2022. Guys, this is a pattern that is predictable. This is a pattern that is repeatable. This is a pattern that is testable. So if I scroll back and I find momentum and at least the potential to break, and here we go right there. I'm going to put a circle around that tail. This is how I'm going to study. And I'm going to go back on my small chart and I'm going to look for that circle. That's all. And I'm going to say, egads and little fishes, the market pulled right back to an area of resistance. It's right inside of that retracement zone. And sure enough, with those advantages, the market continued down. Guys, this is your pattern. That happened at 7:53 a.m. They went right before that, in case you missed it. And if we scroll back, we're going to see if we can find another. Middle of the night's not always the best, but here's one after the market reopened. Let's go see what it looks like. Boom, 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 boom. But you can use this. Your software goes back 10 days. Look at that. Right back to the area inside of triggers. You can scroll back for 10 days, cementing this pattern in your brain, recognizing it, studying it, believing in it. Here we go again. And just saying to yourself, man, if I could just wait for that fight, if I could just wait for that pullback to an area inside of triggers, I can take the best trade Nexgen teaches. And guys, that's the high probability trend trade. Your current bar says that we have momentum, but your current bar says we do not have a clear path. And if rule number 2 is not met, I'm not worried about looking for an entry. Are there any questions about the high probability trend trade? Guys, I say the same thing every morning. I say it with the same verbiage. I say it with the same looks. It's learning one thing so that you can see the rest of the things. Ron, here comes your nickel. The high probability trend trade is probably not going to be your get-rich trade, but it's going to open your eyes to see the one that may be. So that's it for Ninja Trader, guys. That's my lesson every morning. Now we're going to go into Trading View. So Adriana, if you're watching the video, this is for you. Trading View is just a different platform, guys. Ninja Trader is a place for us to run the indicators. Trading View is a place for us to run the indicators. Trading View needs 3 rules to take a trend trade. Trading View needs 2 charts to make those 3 rules true. Large chart and a small chart. Big crowd, small crowd. If you guys are in the funding company and you're struggling, listen closely. This is kind of the keys to the kingdom for you. Your 15-minute chart is your directional chart. It lets you know which way the trend is going. The 15-minute chart, that big, slow glacier of a bar, will define the momentum. It'll define key targets. It'll define terminations. Guys, the large crowd, the large chart tells you what you're looking for. The small chart is just an entry. And we use a 1-minute chart, which is still a really long time, especially when you're waiting for that timer to count down to give you an entry. But the 1-minute chart defines the immediate strength. It uses these small triggers to let you know what not to fight. The 1 minute defines your entry points, the areas from which the market is most likely to bounce to continue with a large chart direction. Your large chart will have triggers, just small triggers, one set of triggers, just a fast moving average. There are no large triggers on the Trading View chart. There are no background colors. The way I present my workspace, guys, it's black. You could even have gray bars. You don't even need colors on the bars. Triggers will define the direction, guys. Anything else is just noise. On your small chart, you do have small and large triggers. Because separation is strength, These large triggers come into play for the second trade on the plan that I gave you. It's what we call a momentum trade, and it uses that strength to bounce off of areas and continue. For a trend trade, you'll only use the small triggers. That's it. Both charts will have areas, T3 indicators. Guys, these areas are bouncy. I don't know if I've mentioned that. There are divergence highs and lows, can behave as support and resistance. There's one-to-ones, both magenta and yellow can behave as support and resistance. There's mid-bands, can behave as support or resistance. And there's outer bands. Those are termination conditions. These areas will be on both charts. We're going to use areas and triggers, guys, once again, and we're going to define everything we need to take the best of the best. So let's start with the 3 rules. Rule number 1 says don't trade directly into areas on your large chart. What does that mean? That means that if you don't have room to make money, you're trading directly into an area. Rule number 2 says don't do it on a small chart either, silly. Areas can create bounces. Areas can cause reversals. Areas can mess up your good time. So your first 2 rules are the exact same rules, just on different time frames. Your final rule, your entry rule, says buy or sell a pullback. That's the fight. Do it in an area because areas are bouncy. And then it says get a close on the weak side of the triggers. That is the trading view difference in entry. That's the one that will keep you from fighting the immediate momentum that those small triggers have brought against you. So let's define trend. If you're not comfortable with up or down, let me know. I'll figure out a way to work through it. Small triggers on the large chart define the trend. They're either up or down. That's it. There is no sideways trend. That's not a trend. That is indecision. And if the people in charge can't decide which way they want to go, how are you going to trade in the direction they want to go? You can't. It's impossible, right? So direction is defined by the 15-minute small triggers. It's either up or down, which means currently the trend is down. Does everybody see it? This is the NASDAQ live bar. Small triggers are down. Therefore, I'm looking for rules to be met to go down with them. That's it. 15-minute from wherever I take my entry has to have room to trouble. Well, Mark, how much room is enough room? All of it. This is me personally, I want at least $100. At least $100 per contract. 5 points on the NASDAQ, 10 ticks on crude, whatever, 8 ticks on the S&P. I want $100 worth of room because if something goes wrong when it hits it, I need time to react. Some of you make that tighter. Some of you, as you learn the software without the same reaction time as someone that's been doing it for 6 years, may want it a little bigger. You'll have to make that decision. But the idea is that there's room to trouble. And the idea is that on the small chart, you give it the exact same courtesy. Because trading into resistance can create a bounce down, and trading into support can create a bounce up. And there's just no reason to enter a trade if there's nowhere for it to go. The goal is to get paid. And then once you have a clear path, and this is where that pattern comes in. The market is up. The trend is up. Everything's there. The room is clear. And then the fight starts on the small chart. And that is the small triggers going from up to down. The immediate momentum is now facing down. And you're going to look lower. You're going to look for support because support is bouncy. And that's where the trend trade originates. And when it gets to the support, you're not just jumping in. You're not waiting with a limit order. It's an up bar, a reversal bar up, that finishes above the small triggers. The trade side of the small triggers. This is the weak side. This is where reversals happen. It's the same look that got you to your amazing entry. Guys, your trend trade is a pattern. It's a repeatable pattern. It's a testable pattern. And from wherever you take that entry, rule number 2 has you making sure there's room before you hit something solid that could create a bounce. And that's really all the trend trade is. And maybe I oversimplify it. I think, personally, my own 2 cents, it's a little easier for new users than NinjaTrader because it's slower. You have to wait for a bar to count down to take your entry. So let's go through what it looks like. If the smalls are up, I'm choosing to go up with them. If there's room to trouble, then and only then can I go to my small chart, and I'm waiting for the fight. Guys, you'll know that it's time to take a trend trade when the market's all the way up here. Small triggers roll, signals the beginning of the fight. I look lower. I look for one-to-ones. I look for mid-bands. And when the market gets there, my job is to wait for this bar to finish. Give me an up bar where both corners of the finish are above the small triggers, guys. That is the look that keeps you from fighting the immediate strength. That is the look that sets the small chart in the direction of the large chart direction. And it's just a pattern. First it's down, room to trouble. Because the small triggers roll up, I wait for a pullback to a higher area and a down bar that closes on the correct side of the triggers. That's where the small chart reverses and continues in the direction of everything the large chart is telling me. And guys, it is the same over and over and over. Summing up trading in only 2 words. The triggers were down. I had room to trouble. Not an entry, not an entry, no, 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 no. And then finally the market gives me a down bar that finishes on the right side of the triggers. And it goes right to the area, and you can't see it because I covered it. It goes right to the area that could create a bounce. I took 7 out of 10 of my contracts off right at that area that could create a bounce. Why? Look at the bounce. 3 of them went off break even. But guys, this is the pattern. This is the pattern that people are using to pass evaluations. This is the pattern that requires patience. This is the pattern that if you're really following the rules, your entry is not on the down bar that finishes below the triggers. It's on the next bar because you're going to let that little timer run to 0 before you hit enter. And that's it. I wish I could say it was more complicated than that. Triggers are down. I've got room to trouble, and it's currently pulling back. Look at that. The small triggers rolled up. And here's the deal, is I don't know if it's going to be any of these areas. I don't know what it's going to be. But my rules say wait for the pullback to an area. There's the first one. And then get a close below the triggers. And now we're in that 90% because pretty much no matter where I get a close below those triggers, I'm going to be trading directly into a 1-minute area, which means that it doesn't fit the KISS plan, which means that it could create a bounce. And if you don't believe it could create a bounce, there's a good example. And hell, there's the area creating the bounce, taking you back, hopefully, to your entry. Pretty cool, right? And all it is a pattern. Same thing every time. Same rules every time. Same entry every time. And if you study this pattern and you learn to trust this pattern, it becomes easy to wait for this pattern because you know that it provides you an edge and the ability to win more than you lose. So now we talk management, and this is one of the cool things, and this is what I figured out when I was going from NinjaTrader to TradingView and we were beginning to write this plan. I realized that we needed some form of management because great entries create manageable trades. How do I know how to manage a trade? Well, it starts with a comparison. So as I'm reading my large chart, let me do this. I've got 15-minute read picture. When I'm reading my large chart, I'm going to say, okay, the direction of the triggers is up. I've defined my trend. I know which way I'm looking for rules to be met. And now here's that same picture blown up. I'm going to ask myself, where is current price in relationship to those triggers? Is it left of the triggers? Is it right of the triggers? Is it inside of the triggers? And here you can see the most current price, and you can see that we're trading left above those small triggers. That's the strong side. And from the strong side of the triggers, this is where 1-minute areas are most likely to bounce. This is where bigger moves typically happen. They are not guaranteed by any means, but that's my look. That's my best momentum look. If they are right of the triggers, I'm on the weak side of the triggers. This is where I choose to get paid in an area to get the hell out and wait for the next trade. Because the weak side of the triggers, well, that's where reversals come from. And if I'm in transition, middle of the triggers, I'm not strong or weak. I might take partial profits, get to break even, cover myself, right? Because one bar on the large chart can go from weak to transition to strong, all in one trade. And it can go from strong to transition to weak, all in one trade. So this will set you up to manage. And then the other thing that's on the KISS plan, I need to get a picture in here. Your initial stops will be placed where the market shouldn't go. And we're going to use the same concept. If the sellers are in control, if the buyers fight, if the buyers fail, that's what gets us into the trade. Your initial stops are placed just above their failure point, where they've lost it, where the sellers took over, where the large chart's back in control. Pivot highs are used for stop placement. If you try to tighten it, you're likely to get hit only to watch it run, guys. That's the initial stop. And then the trigger lines will tell you how you need to manage it beyond that stop. And guys, that's my first hour. Welcome to Nexgen. 2 trades, 3 rules, 2 charts. Look at that. Dang, those things bounce. And now the price is way up here, and there's no room down, and my triggers are flat, and I'm going to sit on my hands and do nothing because that doesn't cost anything. And here in crude oil, everything's going down, and the momentum is strong, and it's pulling back to an area inside of triggers. Can you give me a why if you see that price reached Fibonacci support and none of the triggers broke? And there's only 2 triggers through this support, and there's only 2 triggers through that divergence low. Termination, crap potential twice. And look at the bounce. They are straight lining on the small chart because they reached an area where decisions are made. They reached an area that you knew about for the last hour, and you have a very easy recipe to know when the odds are no longer favorable for you to be in that trade. And guys, that's what it looks like live in the moment. Momentum is good, but a termination condition can shut that thing down. Momentum is great, can break areas. This is the S&P railing up. There's one of those tails pulled back to the area inside of triggers 4 minutes ago. And now it's weak. And now we've reached resistance. And the triggers haven't broken. And we have to wait for the reaction. And guys, that's it. That's my first hour. So it is the same hour every hour. The rest of the day is going to be feedback for you guys. So if you post in the room on NinjaTrader, this is how you get the best feedback. Break down those 3 rules on your chart. Whether you know them or not, hey, this is what I thought about momentum. Be cool if it's wrong. It's all right. That's what I'm here for. But if I don't know how you read your indicators, I don't know if you need a nudge in the right direction. Talk to me about your path. Was it 1 trigger, 2 triggers, 3 triggers, 4 triggers? Was it potential? Was it cleared? And again, you may not know the answers in the beginning, but let me know what you thought so that we can go back to lessons. Same is true with entry. Do it for NinjaTrader. Go back to the 3 rules. Do it for TradingView. Where's it at? I have pictures for everything. There it is. Do it for TradingView. Talk about the direction. Talk about, where is it? There it is. Talk about where price was. Talk about room to targets. Talk about why you took the entry. Guys, if you go through the process of annotating your charts, you are literally writing the recipe for the best of the best. You're saying, this is what I see. This is what it means to me. This is outstanding. I can't wait to take a trade. I'm going to ramble for just a second and then we'll take a break. Why do we talk about advantages and not the money? Guys, I don't have to sell you software. The software sells itself if you learn the plan. A trade, the best trade, the highest probability trade, the 32 flavors of kick-ass trade is momentum, path, and entry. That's high probability, and high probability is defined when each indicator on every chart agrees with the rules for the trade. This is the trade that you'll be able to prove typically wins 70 to 80% of the time. If one of those advantages disappears, you can say to yourself, because you're talking in terms of advantages, I'm no longer looking at a high probability scenario. This is now a medium probability scenario. This is where the majority of your trades are going to be. Medium probability trades need to be managed just a little bit more assertively. Maybe quicker profits getting to break even because it's not the perfect trade. You'll also, because you're brilliant and people like you, be able to look at your chart and say, holy ball, I don't know, I'm going to keep it clean. 2 out of 3 of my advantages are gone. I'm looking at a low probability scenario. Logic dictates that I sit on my hands and do nothing, but I'm not here to tell you what to do. So if you enter that trade, you know that you have to manage assertively. You know that it's already on the south side of goodness. And why on earth are you there? I don't know. Maybe hopium. That's where bad things happen to traders. Guys, you're in control. Despite having zero control over the market, you're in control of whether or not you enter a trade. You're also in control of how you manage that trade. I've only talked about entries. Great entries create very manageable trades, but management's where the money is made, guys. Management, being able to recognize where the market shouldn't go, being able to recognize where the market is likely to go, that's what puts money in the bank. So when you know what's working for you, when you know what's working against you, it just lets you know what you're going to do or whether you're even willing to do it. I am not the trade police. I don't want to be the trade police. As we move forward, when you guys post in the room, I will go back to momentum, path, and entry. I'll probably even take a picture of this, cut it out, put it on your chart, and talk about the read. So I'll get that and play right now. What you do is entirely up to you. It has no bearing on my life. I want you to be successful. So if you post in my room and maybe you got lucky, I'll talk about it. If you post in my room and you were so far outside of the KISS plan, I'm obligated, because this is an educational room, to say, hey, I saw your 50-50 trade and you didn't have a strong bottom and you only had 2 triggers through. And I'm thankful that you won this trade. However, do you recognize that it's not the best way to take it? Were you prepared to manage? That's it. Just to make sure that you know what you're up against when you present in the room. So that's it. Guys, the keys to everything that we do is having a foundation, recognizing advantages, having a solid plan that optimizes your chances of success. If you can keep it that focused as a brand new user, you are more likely to find success, to build confidence, and to get to that point where you begin to see more. That you begin to recognize that with momentum, the odds are favorable for the market to go up. With nothing in the way, the odds are favorable for the market to go up because there's nothing in the way. And you may find a trade, build a trade, create a trade, and share it with the world like Ron did, called the chili dog. He jumps in with all of the momentum and nothing in the way, and he jumps out with all the momentum, nothing in the way. And did you know that 11 ticks on a 4 lot is $100,000 a year? Thank you, Ron. You get 2 nickels today. Guys, he was in the market for under a minute, set himself up for a 6-figure income, and now he's going to go to the beach and make sure that all the bikinis are where they need to be. Get good at what you're doing so you don't have to do it all day, guys. Look at the termination. This is why rules are in play. Isn't that amazing? I love it. All right, guys, I'm going to disappear for a minute. We'll see what the S&P does. I'll leave that one for you guys. When I come back, we're going to click on everything that's been posted. We're going to talk about it. And I'm going to tell you right now, guys, I'm on bended knee and I'm pleading with you. Ask questions. If you're new, ask questions. If you're uncertain, ask questions. This classroom serves everybody better if it's a discussion rather than a lecture. The lecture part of class is over. I'll see you guys in 5. to here. Start clicking on the pictures that have been posted. And I just do these in order. If I ever miss a picture, guys, do me a favor. Don't let me get away with it. It's never intentional. I don't ever skip out on your stuff. There was a week where Pete thought I was doing it on purpose because I must have missed 10 of his. All you have to do is politely say, hey, Mark, I had a post at this time, or even better, hey, Mark, I think you missed it. Would you do me a favor and look at this one, put me in the mix, and that's it. There's not a lot of pictures, guys. We're going to get back to the live market pretty soon. So when we are done with pictures and we're looking at the live market, if the rules are met for either KISS plan that's given out in the room, we will pull the trigger. We will manage it. We'll have some fun with it for educational purposes. So here's our first one. Rule number 1 met, momentum, separation between small and large, action like scissors. I love it. No clear path, rule not met. And guys, here's one of the things is that where the arrows are isn't where the trade is. The trade is actually all the way up here. And it had momentum and the potential to break. And a quick snapback right to the fib, right inside of the triggers. First profits were taken. Second was break even. Guys, this is a medium probability trend trade. And it's a medium probability trend trade because the area isn't broken yet. And that divergence lets you know that area's got less chance to break. So the only feedback I could give on this perfect entry is that when this divergence prints, it's okay to take an exit because your advantage for the best of the best is no longer in play. And when you look at the NinjaTrader KISS plan, the 50-50, it talks about a couple different things. 3 of the 4 trigger lines is a huge advantage. From a strong top or bottom, well, what's a strong top or bottom? Language, it's a termination, no triggers through, that reverses the market. And a strong top or bottom is the precursor for the best of the best. And if you don't have it before one of those 50-50 trades, your 50-50 trade is less likely to win. Strong triggers on both charts is imperative. So it's a great looking trade. Divergence was your exit condition. Does that make sense, Joe? All right. And I'm not just the president. I'm not the president, but I'm also a member. You guys remember the old hair club? This was my trend trade. I woke up this morning. It was right in front of me. Smalls down, strong side, room to trouble. Since small triggers rolled up, I wait for a pullback to an area with a down bar that closes below the small triggers. Exhibit A. 7 out of 10 off at trouble. Break even on the runner. It's hard to go wrong, guys. That's a recipe. That's a trade I took this morning. When we talk about the methodology, it's not here. Let me go cherry pick some pictures over the last 17 years to try to sell it to you. Guys, this happens every day. And it's the money that you don't give away waiting for it to happen. Thank you, Miss Trina. I learned that from you. Now, here's one of the other great lessons that I think that we need to be reminded of. It's okay to take profits, guys. You can see the area. You know that it may create a bounce. The goal is to end positive. And you can't do that if you don't close a position before it bounces out of profit. And at 250 million exchange daily, guys, you have to believe that the next one is coming. And there's the idea of base hits pay bills, right? Base hits pay bills. And I knew that that area was there. I knew that it could stop forward progress. I didn't convince myself because the large chart's on the strong side, it has to break. Because there's room to large chart targets, it has to break. I said, this is an area that could F up everything good in my life. I'll take 7 out of 10 off, and I refuse to have risk on the final ones. And guys, it's a $1,200 trade, right? Who cares if the last couple are break even? But it's okay to get paid. New users forget that. New users hold for eternity. Did you know that the market doesn't know if you made your $500 or $600 a day in one trade or 12 trades? It has no idea. The goal is to get it in the bank. So I made this picture because that's such a good example of why a willingness to accept profit is such an under-discussed part of what we do. I always have to one-up you, Ron. I'm not ready for the student to be the teacher yet. I'm just getting my stride. So momentum and path. Pete, I love this. Pete will throw my stupid cliche sayings into his annotation to remind you guys that they really are true. When everything is screaming, when nothing is in the way, all the room, Pete says, man, I'm just going to jump in. I'm going to get in below something that's bouncy. I'm going to get paid because that's my job. 10 ticks is plenty. It adds up fast. And I'm not going to give it all back. And he follows it with a trailing profit loss, which means that he never goes back to zero on a trade. If it hits his first target, hits money in the bank, no matter what happens next. So great trade, Pete. Momentum and path. Momentum and path. Get in below the bouncy thing. Make some money. Now, Pete, I do have to say, you traded directly into one-to-ones. So path wasn't quite there. Path wasn't quite there. But Pete says, yeah, Mark, when a termination condition reverses the market, when I have this level of momentum, I'll take a shot because my chart reading tells me that the best stuff ever happens after this look. And that with this much momentum, the market's going to be hard to stop. And I'm already clear of the small chart bouncy stuff. Let's just see if we can't push. And sure enough, it did. Great trade, Pete. Strong top. Fib update. You knew about it. This is where Pete says, I'm going to take 2 out of 3. I've got momentum. I don't have a clear path, but I can identify the perfect entry with very, very little risk. I will take that trade because I've got 10 ticks to get to trouble where I choose to get paid and then exit if something goes wrong. And guys, this is 2 out of 3. This is directly into a brick wall. And Pete said, you know what, Mark? Because Pete talks to me. Pete says, I had 2 out of 3. I had 66% of the good things. I'm willing to take and manage this trade. My management hat is on. I know that it's not perfect. I can be assertive. I can get to break even. And great entries create manageable trades, even when they're not high probability. So Pete, really well done again. All the gold stars for Pete today. All right, here we go. Miss Jen. Odds favorable momentum. Room. 50-50. 2 triggers through. 2 triggers not. That doesn't fit the KISS plan. That's okay. This is Jen's trade. Weak bottom. That doesn't fit the KISS plan. That's okay. This is Jen's trade. With that level of momentum, with 2 triggers through, Jen says, hell yeah. I'll take a pullback to an area inside of triggers. And you said, wait, if you waited for the up bar, it would have been higher. It would have been damn near the same, maybe a tick off. But instead of putting your stop right in the retracement zone, you would have had a pivot to put it behind. And that, Jen, that's one of the reasons where confirmation makes sense. Because this stop is right where the market could retrace. And I know that you got nervous as it came down to this fib. Your timing is wrong. So either way, you take it. Arbitrary stop, I'm glad it didn't get hit. You get paid, and then you ride that momentum up to the next trouble area. Really nicely done, Miss Jen. Nicely done. But that's one of those ones. Split triggers gives huge risk. I love a reversal bar. But that's just me. I also like bratwurst and sauerkraut. My wife can't stand it. So everybody's different. All right, 50-50 trade. You're welcome. Good job. With that level of momentum, it's just hard to not do well. 50-50 trade. Price moves up above the blue fib. Small triggers above the 1-to-1s. Large triggers are below. And then, Cab, did you notice that you're missing your synthetic triggers? Is that intentional? And it may be. And you just take a momentum style entry and it runs. Great job. So my guess is that you put a 13.2 template on there and not the NASDAQ 13.2 template. So right click on your chart, Cav, and go to templates. And this is pretty common with people on the NASDAQ chart. They want to put the 13.2 in there, but if you put the Nexgen NASDAQ Futures 13.2, that's the one that'll make it look like that 5-1 entry chart. So that's your template. Nexgen NASDAQ Futures 13.2 Dynamic Renko Bar. That'll put the synthetic triggers on there and make your NASDAQ big old chart look like an entry chart. Great trade, though. All right, and again, I'm not just a member, guys. I'm the president. Strong triggers, clear path, pull back to the area inside of triggers. And this was my happiest moment of the day. Pete called me out on my entry. Pete said, man, that's a late entry, Mark. And he's right. Pull back to the area would have been a lot better. But in my experience with the NASDAQ, I choose to enter with reversal bars. It's just what my plan says. I can't tell you the last time on the NASDAQ I bought or sold a pullback in an area. But man, it's so good because my small triggers were even a full bar away, Pete. There were a million reasons to get in at the area. And I still waited for my reversal bar because that's what my plan says. I knew that that was the best look. That's what my plan says. This was my read. That was my rules. And if you spend any time trading the NASDAQ, that reversal bar has probably saved your butt an awful lot. But guys, it's the same thing that we talk about every day. Every day. And where the market is likely to go, not a bad looking exit, right? Just above Fibonacci support. Guys, when you start your day with a $500+ trade, that was it. That was my first and last trade for the day on that account. Done. Somebody's sending me a check. All the momentum. Jump in with momentum below the bouncy thing. Get paid, get out. Turns into a trend trade. Get in, get paid, get out. Turns into another trend trade. Get in, get paid, get out. Pete, if you weren't living in a desolate Arctic wasteland, I would say go golf. Guys, that's some solid trading. All the momentum with the potential to break, jump the fudge in, get out. Reversal bar, pull back to the area inside of triggers, get in, get paid, get out. Reversal bar, pull back to the area inside of triggers, get in, get paid, get out. Gosh, Pete, outstanding. All right, Cav, is this you, Cav? So weak bottom, all the triggers through, very much a weak bottom. 23.25, 23.25, so we're right here. Losing momentum. No pullback to the area inside of triggers, just jump the fudge in into the bouncy thing. And what does it do? Just drops it on the wrong side of everything. And thank goodness, the market went up. Pivot stop out on 2 triggers through losing momentum, jump the fudge in, and man, Cav, you pulled one over on them. Some days you're the boot, some days you're the butt. Cav, you are steel toe today, bud. You are steel toe. I'm glad that worked out for you. Again, trading with half the picture here. All the momentum, nothing in the way. Pulls back to the area. Still way on the wrong side of those large triggers. So I don't know where they would have been here. Up around 55. 55. Nope, so probably right at the base of those large triggers, which is the perfect trend trade. And off it goes. And it's interesting. Okay, 70, 70. So you're out at trouble. Nicely done. Good job. Those synthetics will give you a little more accuracy. Counter trend, strong top, triggers rolled, not strong yet. So termination. Let's break this down. Because Pete calls it counter trend. But I want to talk about all the stuff that's good. Pivot, stop out, no triggers through. Textbook termination, no long trades. 3 divergences in the same price range. Right at a termination from the large chart. Textbook termination, absolutely no trades. Not long. No rules. Smalls get below the large. The large have rolled down. The momentum is down. Strong triggers. The large triggers are rolling down. The large chart isn't perfect yet. But that small chart that shows change says, Pete, we got a shot, brother. And he makes a little money. And then it pulls back to the area inside of triggers off of that good top. And he goes, whoa, I love this. Let's do it again. And guys, this trade right here that Pete took, and this is where experience pays dividends. This is where seat time, time on the pond, that's what we call it. Where time on the pond pays dividends, because the trade that he took here is the exact same trade that Nexgen was teaching in 2004. When a termination condition stops the market, when the small triggers roll down, selling a pullback, guys, catching edges, that's exactly what Pete did. It did it really well. Nicely done, Pete. Going old school on that one. When everything is up and there's nothing in the way, jump the fudge in and make some money. Great hold, Pete. Forcing the market to take you out of the second one. Momentum and path, my friends. Momentum and path. Good bottom, strong triggers, potential to break. Pulls back, wrong side of everything. Up it goes. Cav, I don't know if these fit your plans or if you're just got clackers the size of Phoenix. Fighting momentum on a 13.2 on the NASDAQ, directly into a fib with a pivot stop out and divergence. Only 2 triggers through. Man, you keep winning. Go to Vegas. Go to Vegas. All right, Miss Trina. Triggers are down. Strong side. You're in at 60. There's the perfect. Nope, that's not the entry. There's the entry. Nice entry. Plenty of room. And it just didn't work, did it? Man, it just didn't work. Is that yesterday, Trina? You could defend that one in a court of law. Without a doubt. Without a doubt. Yesterday was a hard day. Yesterday was my first losing day in a couple weeks. True story. I struggled. There's been a lot of them. Over the last week, Trina, the NASDAQ. The NASDAQ hasn't been easy. I was talking to John about it. I've had 2 or 3 days in the last 7 where even though I'm finishing up money, Trina, I'm spending $250 on commissions because I couldn't get any follow through. There's been this crazy fight in the NASDAQ. But sticking to my plan, long term works out. Sometimes they don't work, right? Sometimes they just don't work. So Trina, everything is good. There's nothing wrong with it. It looks beautiful. Actually, I remember this. They ended up going back up from here. They overran the outer bands, and then they did end up going back up. And there was no predicting that. Everything set down at this point. I may have taken the same look and had the same result. So good job. Triggers down. Pull back to the area. Let's see what happened here. Entry on the pullback for less risk. Oh, then they spiked and ran. Those sons of guns. I love when you do this. That's just too far below. Let me get a better entry. And then they just pivot, stopped out, and went. Trina, you're going to see this on the NASDAQ every now and then, and I'm not telling you to change your plan. If this is perfect, and you see that, And think of it as a pivot stop out. And what did they do? The buyers came back and they literally stopped out the high by a couple ticks. Do you see it? And then they closed back down. I love that look. That's my second chance look, Trina. That is my, if I'm going to take a trade twice and everything is perfect everywhere and they just pivot stop me, I'm in. I'm in. I will. And when it's on its way down, I will catch it and I'll put my stop above it, because when everything is perfect, you're going to see that pattern every now and then on the NASDAQ. And I'm not saying change your plan, but go back and look at it. Go back and find some instances and decide whether or not it's right for you. But that is certainly that pivot stop out. And you'll see it. You'll see them do it everywhere. Here, let's just see if we can get one. And I bet you we will. This is a good example right here, where they come down and they test and then they just take it out and then they go. That's kind of real world. And I don't know if that was where that was. But you see it every now and then. It's just a part of it. That's how these guys trade. That's one of the reasons why our stops are effective. If they take it out, let's minimize risk. 2 great trades. Not the results you wanted, but 2 great trades. Not a good bottom. Guys, let's talk about good bottoms, strong tops. This is the 3rd time that I've seen this. And it's the same text. And so, Cav, I know that it's you. And that's okay. You may have a different definition of a good bottom. We all like what we like, right? But when I talk about a strong top or bottom, not good or bad, but if I talk about a strong top or bottom, guys, there's a lot that goes into it beyond just saying, oh, the market reversed. So a strong top or bottom, let me do this. A strong top or bottom means that the buyers were in control, that the buyers were full tilt boogie, nothing in the way, nothing can stop them, life is good, they're going to go on forever, and then they reach a key area. They reach an area where decisions are made. And at that area, despite everything they had going for them, one of 2 things happened. One, either the sellers said, F you buyers, this is the line in the sand, you're not going any higher, we're taking over. That's what creates the reversal. Or the buyers said, holy shit, I'm tired. I'm done. That's profits right at a key area, and that allows the sellers to take over. Either way, the decisions made at that key area with absolutely no triggers through were so stinking impactful that they reverse the market. And then when the sellers take over and they're cranking, they're cruising, and life is good, and right there at that key area, the triggers don't break, and the buyers go, ha! We just wanted it to go lower so we could get a better price, add on to our position. We're going to reverse the market and go up. The decisions made at a key area were so impactful that it reverses the market. That's what dictates a strong top or bottom. First, it's a termination, and then it's a reversal. Why is that important? Well, I'm going to show you. I'm going to show you why I think that's important. I won't even say think, why I'm positive that's important. And this is the S&P. Because when you have a weak top, not a termination, there's a good chance whoever was in control is going to try again. And when you have a weak top, not a termination, there's a good chance whoever was in control is going to try again. And very often they go to the next key area. So when you have a weak bottom, it doesn't mean that the market's not going to go up, but it's less likely. Weak top, sellers took over, they fought. Buyers took back over, right? Weak bottom, got to the mid-band, sellers tried, buyers shut them down. And you see this a lot. Weak bottom, right back to the mid-band, fib area, push down, maybe a failure. Weak top. So when we talk about strong tops, weak tops, not good tops, bad tops, guys. They're a product of their environment. It means that anything that I'm taking around that mid-band area could create a bounce. It means that 50-50 trades are less likely to work. Cav had all the momentum. He was above the fibs. And that fib update hadn't even hit yet, and he had room to trouble. It's a great trade. But I think it's important to know the difference between a strong top and a weak top, because it pays huge dividends, guys. If you're trading those 50-50 medium probabilities, when a termination reverses the market, you'll find yourself in the highest probability scenario. I think this is almost the same trade. It's a weak bottom, but it's odds favorable, breaking terms, jumping in with momentum. Does that make sense, Cav? So guys, one of the things that we'll do in here is when I see your trades, I'm not judging you. Guys, I've made every mistake that you'll ever make. I can't say that enough. But what I do recognize is patterns. I recognize patterns in you. And Cav, you're leaning on momentum without a doubt, and you're not paying attention to areas quite as much as you probably could be. And in your entries, there's a phrase. This is my 2 cents, and guys, I don't try to change your plans at all. So rule number 3 is very specific. It says buy or sell a pullback at an area inside of triggers. And it's very specific, right? It says, without a doubt, without question, your best entry comes from here. Why? Because people created the areas. They know where they are. The areas are most likely to create a bounce. And Cav, your thing on entries is that you omit that from the phrase. I would say 80% of your entries rely on a moving average to create a bounce. And I think that's going to create long-term challenges. So if you put that word back in there, area, inside of triggers, if nothing else, it's like kicking a soccer ball or a tennis ball, right? You're giving the market something solid to bounce from. And you're giving it an unbelievably specific location that it has to be. And that's probably my observation and my 2 cents on your trend trades, is that you omit the word area. And once you're outside of those triggers, it changes. So, man, I like what you do. You do good stuff. And then the second thing is you're on sim, right? Trying to get your head right. And it looks like you're making a shit ton of money on simulator. And I'm assuming that it's not translating to the live market. Otherwise, you wouldn't have gone back to simulator, which is normal too. I've done it 1,000 times. So the other thing, when I'm getting my poop in a group, and I'm trying to get my head back, and I'm focused on getting into the best of the best, it's imperative that I have a checklist in front of me, and it's imperative that I write the language of my checklist on the chart, because what I'm doing is I'm putting myself back in a position to be consistent. And when I skip the language, I skip the consistency. Typically, I'm creating opinions, and now I'm talking about me. So Cav, one of the greatest things you can do is take these 3 phrases, right? Or if it's a 50-50, take those 4 phrases and literally write them on the chart. And I can tell you right now from experience, from a lot of time in this room with a lot of different people, if you focus on the KISS plan and really by going by the letter, which means that you have to know what they mean and what they look like. I've had people show me 93, 94% success rates with this. Your chart reads are amazing. And now you're just refining your patience a little bit. So let me know how I can help, please. If there's anything I can do, let me know. That's what I'm here for. And guys, I'm telling you, I don't forget stuff. Like I could talk about trades that you posted in this room a year ago because that's just how my brain works. It's detrimental to my wife's mental health, but um, it's just how my brain works. All right, we got some. Miss Marika, it's nice to see you posting in the room. Oh, we saw that one. All right, here we go. Sounds good, Calf. Trend trade where I thought rule one was met. Small triggers are sideways. Well, it is a downtrend. Papa, are you with me? 100%, brother. You're good. They're down until they actually pinch and a bar finishes and makes them go up. They're down. You're good. Direction is good. You'll see that when a market is hemming and hawing a little bit, like right here, we thought they were going to go down. I don't know if we can make it to where I can see that. There we go. We thought they were going to go down, and they ultimately just ended up going up. So until they're officially down, they just think of them as up. So your read is perfect on that one. Does that make sense? And then you got a pullback, and you get a close below, and it just doesn't go. And you were in at 60, which makes perfect sense. You got stopped out at 68. It makes perfect sense. In at 60, you had room back to trouble. Papa, it fit the rules perfect, man. You took it exactly as you were supposed to take it. You had direction, you had room to trouble, you waited for the pullback, you took the close below, and it didn't work. Doesn't make it a bad trade. It just means that it didn't work. This is a cost of doing business. But I think you read it. I think you read it well. One of the things that you'll notice, though, Papa, is that if you have a slew of termination conditions down here, and on the weak side, they've already been to your target 3 times, almost 4 times. I think you did this perfect. I think your stops are in the right place. And from the weak side, they just don't always go when they've already been there. But dude, it's rock star. I would keep my chin up and hold my head up high and say, hell yeah, I followed my plan. It was just a cost of doing business. Nice trade. And just for Exhibit A, let me show you what my friend Trina did. Same look. Triggers are down, room to trouble, pulls back to the area, perfect close, and the sons of guns stopped her out. And it just happens sometimes. Losses are just part of it. Losses are just part of it. 3 divergence, third one lower. That's a good looking termination condition, Marika. This is Marika, right? Yeah? Red fib, love it. Triggers opening, small below, large red background, all the momentum. Did you notice that you didn't talk about path on this one, Marika? You identified momentum. You nailed the perfect entry. So this would be my question for you. And it doesn't detract or say you did anything horrible. Did you notice that price had reached an area and the triggers didn't break? And that's a termination condition. Are you with me in here? You just posted. Cool. So I love this. I had momentum. I had the perfect entry. The one thing that I didn't have was the clear path, right? 2 out of 3, Marika. Take and manage. Your great entry made it an easy trade. Red background on 3 charts can be deceiving because red's not a rule. It defines the large. Marika, 3 divergences in the same price range. Is that strong top that makes things work better the other direction. You had so much good on this trade. No divergence on the small chart, strong triggers on the small chart, easily definable entry, low risk. I mean, everything about this is absolutely beautiful except one thing. So you take it, and when they get back to 64.25, if something goes south, jump ship. And if nothing goes south, enjoy the spoils of your amazing chart read. And guys, that's one of those times where I'm not mad at her for taking the trade. I just want to say, hey, did you know that it was into a termination? Because it could have done the same thing that it did here, right? And it could have done the same thing that it did here. So I just get my dukes up a little bit, ready for a fight if need be. Termination, strong bottom, odds favorable. Why would that be your entry point? Just jump in with the momentum, Marika, hope it goes up. I don't have rules for this trade. But again, if we go back to advantages, first it's a termination. So the blue fib turning red to blue isn't a rule, because look, that one went from red to blue, didn't it? And it was blue up there as well. So the color of the fib has nothing to do with it. It's all trigger lines. But again, we go back to the idea that from a strong bottom, small triggers are up, large triggers are rolling. If you took an entry right here, it never pulls back to it, you would literally just be jumping in with momentum, hoping that it goes up. But again, stacking advantages. Your chart said absolutely no more shorts. Your small trigger said we want to go up. Your large trigger started to follow suit. Your small chart showing you momentum up. And from above that fib, there's nothing in the way to stop that momentum. Does that make sense? I don't teach this trade. This is a good chart read, relying on momentum and a termination, and there's a lot of opportunity in that. You'll see it in the room from a lot of users. Does that make sense? It's not a trend trade. It's not quite a momentum trade. If they would have snapped back to that blue fib 100%, it's literally a jump the fudge in and hope it goes up trade. And boy, you had a lot of reasons that it would. Good stuff. Nice to see you still hanging out. All right, Miss Michelle. I love it. Ladies in the room, taking over. So we are over here on the short. Large triggers not under, reversal bar, vacuum loser, no surprise it didn't fit rules. Okay, so let me go through and look at it. So, so you had momentum, right, Michelle? It's a good look on momentum. Small's below the large, right? There's no areas messing with you up here. It's literally, let me see if I can make this bigger. We'll do like a little hoopty swoopty. The momentum is down, and the challenge is the mid-band. And you recognized it. So if the large triggers are above the reversal bar marker, that's that vacuum. That's that gap theory, and price is likely to close the gap. So Michelle, you had two options here. The entry makes sense, but because of the gap theory, your stop would have had to gone all the way up here, which is about 7 or 8 points. Does that make sense? Which is a lot. And it's the gap theory that says it's likely to close it. So you have two options. You can take the trade, right, and pick an arbitrary number right in the retracement zone. Because if the market's more likely to go all the way up here, the stop doesn't make sense. You could either choose to wait, let it close the gap, maybe enter on a reversal bar if you wanted. But this is one of the things, anytime I hit a mid-band, I'm asking where are those large triggers, and if they're above that reversal bar marker, it's just kind of a pump the brakes, and then I'll reevaluate right here. And I think you just caught it after, and I think the way you caught it after, Michelle, and the way that you annotated your chart and you said, okay, I committed to this trade and I took this trade and I like this trade. And now that I'm going back and looking at it, I'm going to be one thing stronger going in when I get this pattern. And that's exactly what you got. And from a weak top, that mid-band area is more likely to hold and create that bounce as well. So that fuels the fire a little bit as well. It's always easy after the fact. But Michelle, the challenge is, if I may, is that there's always going to be an after the fact, right? So if I go in and I took this short and I lose, I had momentum, my path was clear, right? But if I go back without the adrenaline, if I go back without the desire to win, if I go back without the emotion, Michelle, what I can do is exactly what you did. I can say in the moment, I was like, hell yeah, let's make some money. But when I take a step back, and it's this conversation that you have with yourself, and this is why I think annotation, and Michelle, I've got nothing but praise on what you did here, even though it's a loser, right? Because, and I'm going to type this out, because I type everything out, because it helps me remember the same way it helps you remember. Because I went back and had the conversation with myself, right? I didn't beat me up. I just did the analysis about what went wrong. I'm already less likely to repeat the mistake. Because what you did, Michelle, is you didn't just say, shit, I lost. You said, okay, everything was looking pretty good, but that gap theory got me, and now you're going to think about it. And I promise you, it's going to be in front of you, and you're going to be like, wait a minute, this is good. The same way people that trade the prairie dog look, where things just peek over and they're like, oh, the area is broken. No, it's not. And they go back and they do that self-analysis, and that self-analysis takes them next level. So props to you, Miss Michelle. You're doing the things that people that get better are doing. Take the trades. Take them all if you think you see them. And then come back and do the analysis. I have to do it on my own, Michelle. I still do it. I teach the classroom. I still do it. And let me show you the one, how analysis really works and helps. The one thing that I found in my own trading, and I do trade the NASDAQ, and I'm going to see if I can just find a visual of it, is if my reversal bar for entry, so let's say hypothetically I'm looking for a long trade. If my reversal bar for entry is directly into a fib, directly into a one-to-one, directly into something that could create a bounce, I lose the trade more than I win. And Michelle, I lost about 100 trades with that exact mistake before I finally went back and caught it in my analysis. I just kept thinking something was wrong. So even at my level, I have to go back and I have to do these things, and I have to try to make it happen and look and really scrape for what might have gone wrong. And then you guys have the benefit of dropping in the room and getting feedback. And I have the benefit of getting that mentorship from John Novak as well. But I'm so happy with the way you did it. It's perfect. Aaron, it's perfect. Can anyone find anything wrong with this trade? This is where I always start on my self-analysis. Did I have momentum? Absolutely, without question. Did I have a clear path? Can't argue it. Did I have an area inside of triggers? 100%. So Aaron, it's the perfect read, right? Doesn't suck any less that you lost. Nobody likes losing, but this is a good loss. So Aaron, are you ready for the I'm following the basic plan like a rock star? Let me add something to my read. When it's a weak top, mid-band area is more likely to create a bounce. It doesn't mean that it's not the trade. It just means you have your management hat on. It never gave you an opportunity. Everything is perfect. Um, Actually, I don't even know that I can do anything with this. It's just a great trade that didn't work. Just a great trade that didn't work. And you didn't take the 50-50 with divergence. Perfect. I mean, everything is solid, dude. It just didn't work. We're seeing a few of those today. Look at your S&P right now. They're fighting. They're trying to figure it out. Smalls are up, large are down, 3 divergences above. Guys, this is very much a pump the brakes pattern. No, I don't think so. I don't think you are. Tick replay is on here. I'll do an F5 on mine. But it looks like, Aaron, they are just out in space. And they're trying to figure it out, and the buyers and sellers can't come to an agreement. And now for me, I'm gonna let them rock star one way or the other. Because there's two forces just going after it in the schoolyard. One of them will win. ES is in a range. Absolutely it is, Boaz. When I used to teach momentum, well, I still teach momentum, but I used to use this picture right here. And I liked this one about rule number 1. Wide open, everything's good, right? Everything agrees. Anything can happen, there's a reversal. Odds favorable, there's a winner. Anything can happen, there's a reversal. But I reference this, where they start to not agree, where the colors start to not match, where they can't seem to go up or down. It's exactly what Boaz says. They're in a fight. And you can try to predict who's going to win the fight, or you can just wait for one of them to just blow out of it. And crude oil's kind of in the same fight. Look at that. I mean, I'm sorry. Crude oil's been pretty slow lately. Does it mean there's not opportunity? No, but you're definitely waiting for it. So, great trade, Aaron. It's hard to have a classroom where you have to keep telling people that their trades are good. They just didn't work. But guys, that's trading some days. Ron, gonna run on you. That's okay. Hopefully you saw what I was talking about the other day. Listening to your class keeps me in the game. I like it. I was just watching charts. I would have gotten bored, left, and missed the last trade. Enjoy this class every day and learn something every time I'm here. Time to go walk the beach and look for termination conditions. Bouncy things. I appreciate you, Ron. Have fun, man. Aaron, can I tell your story? I don't like giving it away, but can I tell your story a little bit? Or, you know what? I won't tell your story. I'm going to tell a story because we're out of pictures and the market's not giving us any entries. Where I had a gentleman, and some of you have heard this. Trina. Some of you have heard this story. But I had a gentleman call me, and I wasn't entirely sure who he was, to be honest. I'd seen his name, but he'd never spent any time in my class. He'd never posted pictures. He assumed that by watching videos, he was going to become a professional day trader. And he calls me one day, and he says, Mark, your KISS plan is full of shit. Pardon my French. Your KISS plan is absolute garbage and it doesn't work. And I'm like, okay, let's get to the bottom of this. Let's figure out what the challenge is, because it takes a little bit to rile me up. And he said, I'm taking the perfect trend trades, and they don't work. And I'm taking the perfect 50-50 trades, and they don't work. And I'm losing all of my money, and I'm mad at you, and I'm mad at Nexgen, and I think that this is snake oil, and I'm going to tell all my friends. And I was like, okay. I said, well, first of all, I've never seen any of your charts, right? You've never given me the honor of seeing your chart read to make sure that it's accurate. He goes, I know it's accurate. I watch the videos. All right. You guys that are more than 30 days with me will get a little bit of a kick out of this. Because when he did show me his trades, I want you to see what he showed me. He said, I think we can get them all maybe in one picture. Just so you guys have an idea of how misunderstandings of the rules can create problems. He said, Mark, all my triggers are green. Rule 1 is met. Guys, is rule 1 met because the triggers are green? Is anybody good enough with NinjaTrader to know the answer to that one? No. And that's okay, right? But that was misunderstanding number 1. So we took some time and we talked about how separation is strength. And he goes, oh, I didn't really understand that lesson. I'm like, that's cool, man. No worries. And then he said, those yellow 1-to-1s are broken because price got above them. Guys, are these 1-to-1s broken because price got above them? No. What's it take? It takes 4 triggers, right? So that was misunderstanding number 2. So before he ever even got to entries, this poor gentleman was struggling with the 2 most important rules ever. So we spent the week and we started talking about them, and we started talking about momentum and terminations and counting triggers, and he got clarity on his misunderstanding of the rules. And then we talked about his 50-50 trades. And he was trading with multiple divergences and weak triggers, and it wasn't even 50-50 because only one tick or two had gotten above. So what he clarified on the high probability trend trade made it much easier for him to execute the medium probability trend trade. So he presented in my room for a week, and he probably gave me 30 or 40 pictures during the week. And he said, Mark, I'm going to go and I'm going to take my new understanding of the rules, the pictures that are literally handed out to me every day. Instead of watching a video, your feedback helped. And he goes, I'm going to trade it next week. And he traded it the next week. And he was 93% winners on the same plan that he had deemed garbage. And it wasn't because the plan doesn't work. It's because he didn't understand strong triggers. And because he didn't have that understanding, he wasn't working with that advantage. And he didn't understand termination conditions. And because he didn't have that understanding, he was working without that advantage. And the same is true if you don't understand area inside of triggers, you're working without that advantage. And guys, I love it because he started sending me pictures saying, hey, 93%. And then the next week, oh, I'm at 82%, but I modified it a little bit. And the next week is like, oh crap, I was 43%. I got a little crazy with the rules. And guys, as far as I know, he's still trading professionally somewhere. But one of the biggest challenges that happens is not understanding the rules, not asking for clarity, believing that because you have deemed it true, it is. And that's one of the biggest mistakes that people tend to make with this software, is just not going through and learning the basics, learning the foundation, then taking that foundation and building. And I'm guilty of it too. I'm guilty of exactly what he did, which is why when he called me back and said, man, sorry about that, I was like, dude, it's cool. I was so mad at John Novak. And there's a lot of you that finally post, that finally tell me how you read your indicators. And I would wager to say that there's not one person that's gone through that effort that didn't get everything they needed for clarity. And then once you have the clarity, guys, once you know what it means to have the rules met, the hardest thing that you will ever do is nothing. The most difficult thing that you will ever do as a day trader is sit on your hands and not take a trade because your rules aren't met. And if you don't believe in them, that's a very difficult task. So there's my little story. Sorry, Aaron, I said it was going to be about you, but then it wasn't. Everybody does it their way first. It's just going to happen. I don't know why. I did it too. But if you back it up and you build a foundation and you discover the easy trades, all the variations tend to come into play, guys. All the other things seem to fall into place. So for those of you struggling, the high probability trend trade is your core. Give it a week. You're not making money with your trading anyway, right? Give it a week on Sim. Post 1 million pictures. And then once that becomes easy, you start to see the other things that help and hurt trades. And that's your chart read, not your rules. And your chart reads will transform your rules into a more robust plan. Or you'll say to yourself, as some people have, why on earth, Mark, would I change my plan when I'm winning 70 to 80% of the time and managing it well and making all the money I need to make my goals? That happens too. That's where most people go back to. I don't need all the money. I don't need all the entries. I don't need every exit. I just need the best. Boaz, let's see what you did, my friend. ES stuck. Oh, I might be missing fibs, huh? Can't break above here. Can't break below here. Go make a sandwich, right? Dollars to donuts, they break out of it eventually, Boaz. Dollars to donuts. They get out of it eventually. But it's pretty clear. And I like when you guys do that. When you believe in the software enough to say, until it's out of this big yellow box, I'm not going to do anything. Go play with your puppy. You can see it over here too. Well, this is, here, let's go to the S&P and see what they look like. Here's that same S&P. Just can't seem to find a clear path, huh? That's one thing TradingView will do, a little bit different than Fibonacci. In times of consolidation, your 1 minute chart will put so many areas in there, it'll just piss you off if you're using Chart Prime. And you'll try to shoehorn one in, and there's just no room. And if you're leaning on your rules, there's no unnecessary losers. Gold is down. There's just nowhere to go. Whoops. Let's see. There we go. I'm going to turn this into a silver chart. Someone asked earlier. So we're going to check it out. Guys, what do you want to talk about? It has been so crazy on silver. What's going on here? Just absolutely nuts. Terminations work though, don't they? All right, I'm gonna go take a break. Talk amongst yourself. Oh, so Boaz, here. So right here on the side at the most current price, you can see the timer. If you don't see the timer, down here, the little hexagonal nut, go to more settings, scales and lines. Here, let me get a complete picture. So from right here, scales and lines, count down to bar close. And that way you can time it out. You know, it's funny, Boaz, I was thinking of you yesterday. I was watching the NASDAQ in the afternoon. And yesterday afternoon in the NASDAQ, I don't know if you guys watched it, but, oh man, I screwed that up. Dang it. All afternoon, they were just up, 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 and those triggers were up, 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 up. And it was wild because no matter what the Renko bar said, they were going with those 15-minute triggers, Boaz. And I was like, man, there's a reason he leans on those 15-minute triggers in that trend. I was like, there's probably a good lesson there. Good stuff. I don't know. You guys teach me as much as I teach you. There's no doubt about that. Every time you guys post, I learn something. When I talk through it, I learn something, and I think it works pretty well. Miss Trina? Triggers are up. Weak side, room to trouble. Pull back to the area. Closes above. You're in at 82, you're out at 90. Threading the needle, Miss Trina. Fits the rules, though, doesn't it? Fits the rules. 100%. That's pretty slick. It's tight, but it worked, huh? 82 to 90. That's a $320 trade. Nicely done. Miss Jen, strong top, 100%. Momentum, 100%, 50-50. No divergence. Didn't quite make the area, dagnabbit. You catch it on the way down. Easy money. Nice job, Miss Jen. Look at the momentum. And from a strong top. We're seeing that kind of a recurring theme, right? Strong top or bottom, coming off that termination, all that momentum. Nicely done. You saw an area. What does that mean? The red line right here? Oh, yeah. I thought maybe it didn't get your mid-band and you caught it on the way down. You just waited for confirmation. I like it because you're coming right off that 1-to-1 with only 2 triggers through. Let's force them to go. Let's reduce the risk. See, that makes sense, right? With all that potential from 22 all the way up to 42, that's solid confirmation use. I like it. Well, if there had been divergence from that 1-to-1, Jen, that's tough. All it did was bounce you to your entry, though. So I keep an eye on that divergence. I usually skip it or look for a higher push before the reversal bar. That's my plan. Or I just choose not to take it with only 2 triggers through. But good eye. You knew it was there, and that lack of divergence gives you a little bit of confidence as you head into it. No triggers through, either of them. We'll see if the buyers decide to take over. All right, guys, I'll be back in like 3 or 4 minutes, and then we will finish strong. Post them if you got them. Here we go, last hour. How do I get around the crashes? Ninja Trader Joe? You don't. Ninja Trader crashes. Hell, I've had 2 today. Ninja Trader crashes, guys. That's one of the reasons that we built the funding company around TradingView. Because Ninja Trader crashes. Look at that. Termination condition. So far holding. See what it does. Boy, Jen, that's how you make a $100 trade feel bad, huh? That's one of the things you got to deal with trading too, guys, is you take the perfect trade and you follow your rules and everything is great, and then they run for 100 points and you're like, oh, I knew it. But you didn't. It's all part of trading. NASDAQ channel down, need to wait 15 minutes. We'll change to the south. Probably. Maybe, right, Boaz? Or they'll break through it, pull back to it, and continue up. Isn't that an option as well? I always encourage you guys, look at both options, always. And the only reason I say that is because when you decide that it's going to go down, all you're looking for is down. And maybe you'll miss the perfect long trade coming. So we'll see. We'll see what happens. I'll open up NASDAQ. We'll watch it too and see. Because we're at that point where you guys got quiet. So we'll open up some NASDAQ and see if we can find anything. Janik, how you doing? Richie Rich, what can I do for you? Andy, GWC, Nanda, nice to see you in here. Papa Grigio, getting better every day. Jeffrey Dean, oh yeah. Vad, Michael S., Morgan, Phil, Aaron, Miss Michelle, Kokofi. Everybody doing all right so far? D, good to see you back in here. Mark SP. You know, there's 2 things that I know to be true when you guys show back up in my room. It's one of 2 things, guys. Either you need help and you're hoping that you stumble on something that you need help with, or, and this one upsets my wife, maybe you have a little crush on the sound of my voice and you're just hanging out being a stalker. So chances are you have a question. Don't be afraid to ask it, guys. That's what I'm here for. That is what I'm here for. Yeah, Morgan, we know with you, Creeper. I've already talked to your fiance. I love it. Whoa! Oh, that's the NASDAQ just getting back in, huh? Hey, look, Boaz, I think we were both right. They broke the trend line, tried to go up, and then crashed back down. And they're still stuck. Still stuck. We on simulator? We're on simulator. Let's get something with a trailing stop. Strong bottom. Odds favorable. Only 2 triggers through, so it doesn't fit my plan yet. Man, Izzy, it's so hard to ask for help. You guys know that my brother is the guy that wrote the software? I wouldn't ask him for help, Izzy. I grew up with him. I wouldn't ask him for help. Man, ego's big. Ego is hard. There's 3 triggers through, guys. Up. Here comes the fight from the small crowd. Where are they likely to go? Probably an area inside of triggers, right? So it's strong bottom, odds favorable, potential to break, got my reversal bar, but they forgot to come back and get me at the area inside of triggers. Rats. Now it's odds favorable, clear path. Now it's into a termination. Not quite. You guys want to try it just for grins? Nope. Termination. Cancel my order. That's how quick. That's how quick. What should we talk about? You guys want me to just go into story mode? I know how much you love that. I know how much you guys love story mode. Let me tell you the Mark Novak story. Gather round, children. When I first started with the software, I thought, hey, this looks like fun. For those of you that don't know me, I had my second spine fusion. It took me out of my career, and COVID had just hit, and I was at the house, and my brother goes, okay, I don't know how we could get a bigger sign than this. It's time for you to learn how to day trade. And I said, all right, let's do it. My last name is Novak. I'll be rich by Tuesday. And I was like, this is going to be awesome. And John Novak told me 3 things. Here, picture number 2. John Novak said, Mark, here's your rules. Write them down. Gave me a checklist. And he said, I want you to take pictures. 10 long trades, 10 short trades that fit the rules. And then he said, and I want you to practice, track them in the spreadsheet so you know what they look like, and just post in the room so I can give you feedback. That's all he told me. He said, keep it simple. And he said, Mark, here's your rules. And he said, Mark, this is what your trade looks like. Now all you have to do is post in the room and we'll make sure you get to where you want to be. Does that sound familiar to anybody? Well, I lovingly replied, no way. My last name's Novak. I'm an egomaniac with a chip on my shoulder. I'm going to be rich by Tuesday. And then I realized that there probably was stuff to it. It wasn't just make a bunch of money. And I started getting lucky on Simulator, taking the most ridiculous trades and getting paid handsomely for it. Simulator Millionaire. And about 30 days in, I took $5,000 of my money and I went live. And I didn't know why I was trading. I didn't know why to enter. I had no idea how to manage it. I didn't even know whether to go up and down in some instances. I traded my guts, my emotions, my fears, my desire to win. And I was separated from all $5,000 in 21 trades, maybe 22. I don't want to lie to you guys. Over the course of about 2 hours. And at the end of that 2 hours, I didn't know shit. I didn't know why I lost. I was mad at John Novak for ever creating this stupid software. I was mad at the market for taking my money. I was mad at everybody that had $5,000 more than me. And the only person that I wasn't mad at in that moment was me for not doing what was asked of me to get good at the software. So right here, I had to make a decision. And it wasn't an easy decision. Because when you get your teeth kicked in, it's hard to believe you'll ever be good at something. And I know that. I've been there. I was dejected. And I had to tell my wife that I sucked. And I said, you know what? John's been doing this for the better part of 25 years. I'm going to follow the path. I'm going to do what he asked me to do. I'm going to start taking pictures. I'm going to write down my rules. I'm going to use a checklist. And most importantly, I'm going to participate in this class. And I use the exact same spreadsheet. I've modified it a couple times. The exact same trade tracking sheet. And I remember this like it was yesterday because it had a place for you to put trades all the way down to number 279. And I don't know why I still know that number. It was 279 where I had to add a tab and start over. And I filled it to the next 279. And I added a tab and I started over and I filled it to the next 279. And when I got to the end of the 279, 3 times over, I was freaking amazing at entries. I was so good at entries. And I would take great entries. And I was so terrified of losing that $5,000 again that I didn't know how to manage them. I would take 20 trades a day and be down $50 because commissions ate them up because I would take a tick on everything. So then I realized from these great entries, I've got to learn to manage it. And guys, I wrote the KISS plan. John wrote the entry rules. John Novak is 100% responsible for the entry rules on the KISS plan, and I just kind of latched onto his brilliance. But I took every shortcoming I had and turned it into a management plan for that very easy way to go after it. And it all was dependent on the great entry. And it was knowing where the market shouldn't go. And it was stop movement, and it was quick profits. And I started to move up, and I started to move up, and I started to get better. And I didn't second guess, and I wasn't hesitant, and I didn't start looking for reasons not to win. And sure enough, I got there. I did it. The way I teach this room is with the hope that you start here, where you just follow the path. And guys, I'm not unrealistic. Every one of you is going to go through this roller coaster because you're all egomaniacs. You're all alpha males and females. You've all been in positions where the only way to get ahead was to constantly be active. There's an easier way. So when you're done doing it your way, right? When you're done feeling frustrated, when you're done believing that it's the market and not you, when you're done believing it's the software and not you, when you're done believing all those other things, try it Nexgen's way. Let me know how it works out. So Izzy, until you get here, asking for help is very difficult because you still believe you can teach yourself to be a multi-million-dollar day trader. When you accept that you need a mentor or a coach, it gets so much easier. And part of having a coach is allowing the coach to give feedback. That might have been one right there. 2 triggers through, weak bottom, divergence prints. That's not anything in my rules. And you said down and it's already up, huh? Didn't take long. Whoops, that's the wrong indicator. Let's go back and see what that pullback looked like. Oh my gosh, right to an area right inside of triggers, huh? Did you catch that one, Boaz? So guys, that's my story. For those of you that that wanted to hear it. So Jen, let's talk about the 2 things that are wrong with this trade. And I love that you never got to the second thing because the first thing. So strong top. That's the first thing. At least 2 triggers through. That's a good thing. Divergence kills 50-50s. Jen knows that. With only 2 triggers through, doesn't take it. Jen, did you notice no areas inside of triggers from which to take that trade? So even if you're cool with 2 triggers through, even if you're cool with a divergence, you still didn't have an area inside of triggers to define an entry. And price went right to where the market shouldn't go. Pretty cool, right? But that's one of the things that's why it's an order of operations. You never even had to get there to see that that wasn't an entry because that kept you out. You had already abandoned the trade for good logical reasons before you ever even realized that it was worse than initially thought. Good stuff, Jen. Boaz, I knew you would catch that one. Momentum, 3 triggers through, pull back to the area. You catch it on the reversal bar. Man, it was fast. Beautiful trade, Boaz. That's about as good as it gets on the NASDAQ. Man, that is great. Strong top. I mean, just cranking. Nice one. It's the perfect tard. I love it when you transpose those. It's the tard trade. Yeah. You just can't type, can you? Ha-ah. You just can't. Jen, I'm just going to read everything the way it's... Oh my gosh, I love it. I've got the biggest smile on my face right now. And now they're trying to figure it out over here. Pretty cool. Pretty cool. So guys, welcome to day trading. It's not as easy as you thought it would be, but it can be. Miss Michelle, let's see what you did. All right, when divergence printed on the pullback with only 2 triggers through, I should have managed out. Hope doesn't work. And then Michelle, did you also notice that you didn't have an area inside of triggers? That super simple language for entry. So let's take a look. And Michelle, this is where people misunderstand entry rules. So the entry rules say you would be selling a pullback, right? You waited for it at an area. And here's the part that most people don't pay attention because it keeps them out of trades. It's a fib. It's a mid band. It's a yellow, and I'm very specific on that every day. 1-to-1 inside of triggers. Here's your triggers. Hell, even the pink 1-to-1 wasn't in it. But do you see how rule number 3 is not met? And then not only is rule number 3 not met, it's only 2 triggers through, which isn't your best look. And not only is it only 2 triggers through, divergence prints, which kills it even more. And Michelle, do you have a KISS plan checklist in front of you? You don't have to answer that in the room. You're under no obligation. If you were honestly reading your checklist, if you had that checklist memorized, you would have been just counting the things wrong with this trade instead of taking the entry hoping that it goes. Does that make sense? So you don't trust it yet. That's all right, because we're getting our feet back under us. So this is where I suggest, I don't give trading advice, this is where I suggest, if you're getting your groove back, print this out, put it on your desktop, hold yourself accountable, laminate it, get a dry erase marker, and talk through it. It's hard to sit on your hands. I'm not allowed to sit on your hands, but you can sit on your hands. I play blackjack, or I play Scrabble. It's easy to blow out accounts, Michelle. It's so easy to blow out accounts. Here, watch this. Everything says down. Buy, 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 buy. Uh-oh. Keep buying, right? Just keep buying. I'm long 82 against strong triggers. And of course, this one's going to work just to make us mad. It's hard on your mental health. It can be. So how do we preserve your mental health? Follow a plan, right? But that's how easy. And I broke it, clearly. There we go. Taking trades is easy. It's so easy to get into the market. Taking the right trades takes a little study, takes a little practice, takes a little patience. But Michelle, with this look right here, would you have been looking for a long trade? No. So that makes it easier, right? Michelle, with price trading directly into a termination condition, are you looking for a trade? No. That makes it easier. Michelle, without momentum, are you looking for a trade? No. But you have to believe. You absolutely, positively, without question, have to believe that there is a trade out there that you can prove wins more than it loses, that gives you an advantage and an edge. And when you believe wholeheartedly in this pattern, sitting still is easier. And guys, that's take that to the bank. When you know what your entry looks like and you know that it wins more than it loses, it's easier to wait for the entry. But until you trust it, it's not. Not at all. You ever met anybody that used to be terrified of roller coasters, but now they're not? It's because they realize statistically they're probably not going to get hurt. And that takes the exhilaration out of it, right? You could swim with sharks, or you could dive in a cage with sharks. Only one of them's really dangerous. Only one of them should scare you. But until you trust the cage, look at that. It's killing my... It's a difficult day. Not good trades on the ES. Yeah, it is a difficult day. I'm thankful. I hit my goals before class started, so I'm in a fortunate position. I probably will not be trading live this afternoon. I'll be watching you guys trading live this afternoon. That's what I do. So one of the questions that I ask people, and it's a question that I don't want an answer to. I don't want you guys to answer in the room. It's none of my business. It's nobody's business. But I want you to ask yourself this question. Am I making money trading, doing it my way? Does it make sense to try a proven way? That's it. Just ask. Everyone's like, I want to make $1,500 a day. Well, you can't make $200 a day yet, right? I want to go out with the head cheerleader, but I'm not a handsome man. Well, I mean, I don't anymore, obviously. I'm an old man. But guys, if you're not where you want to be yet, stop trying to put yourself at the finish line. If you're not where you want to be yet, learn how to do it the easy way, because if you can't do it the easy way, you're going to struggle with the hard way. That's just experience talking. So, all right. Off my pedestal, off my high horse. We're still calculating here. You think there'll be good setups this afternoon? I like your optimism. I like your optimism. I think there will be too. Look at that. Try to go down and couldn't. 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 Try to go up. Try to go up. Try to go up. Boaz right now is like, man, let's see if they can break out of that range, right? There you go. Starting to break above the trend line. So Boaz is like, you know what? I'll look somewhere over here and see if there's an opportunity since they broke the trend line. Probably not a coincidence that it lined up with an area inside of triggers. Doesn't mean they're going to get there, but let's see what happens. There's a lot of trend line traders out there. I'm not one of them. I understand how they work, but that's not my thing. I'm not a trend line trader, and I think it probably goes a little lower, but all right, pull back to the top of the trend line. Line in the sand. Are they going to bounce? Nope, they're not. That was an attempted breakout that was thwarted. That's why I don't trade trend lines. I'd rather have areas inside of triggers. It's so much easier. All the momentum, clear path. You could just take a reversal bar, right? Put your stop where the market shouldn't go. See if they want to go down and break out. 15-minute is down on the NASDAQ. Well, I've got momentum and a clear path. Pulled back to an area inside of triggers. I don't know if it's going to go down from here or not. Open link. Open link. Open link. Open link. Let's see what you did. Oh, look at that. It's going down. Put my stop behind the reversal bar. Now we can drop the risk a little bit. I don't even know what I'm trading. I'm trading a 4-lot. We'll come back and look at it. Maybe we win, maybe we don't. All right, termination condition. White paint bar. All right. So Phil, you did have a clear path. Or did you? White paint bar, first entry directly into support, right? Second entry, hoping that it breaks. It hit trouble. That's not a rule, though. Waiting until the small triggers get through, that's Ninja Trader, Phil. That has nothing to do with TradingView. It's too slow. I like that you made money, but you traded directly into a zone. You didn't let your smalls get below the large, right? No clear path, wrong trigger look. It is a termination, so I like it. You pulled one over on the market. Good job. Directly into support, directly into one-to-ones. Triggers are still up. Hell, that's a trend trade long. Does that make sense, Phil? Congratulations. It was your turn to win an aggressive counter trend trade. Direction is up. Absolutely nowhere to go. You trade directly into absolutely nowhere to go. Huge stop. Everything in the way. No clear path. 2 for 2. Triggers are up. Now the smalls are below. There's your white bar. Directly into a midband. 3 for 3. No clear path. Into all the shit. Oh my gosh. Full stop out. All right. So what's the lesson today, Phil? You don't need me for that lesson. Have a clear path. What's the market telling you when it doesn't have a clear path? It's telling you, guys, there are decision-making zones. We can't figure out what we want to do. Every now and then you'll predict it. You'll look like a rock star, Phil. So I also want to go back. Where'd you take your entry? So it had already been there. And you took the entry. It had already gotten there. You took the entry. It had already hit everything. And in this one, because the other ones didn't work, even though you were up, oh my gosh, 20 freaking points directly into trouble, you still got stopped out. Because when you break rules, you just break them again and hope that it runs forever to make up for the mistakes. Dude, you were up $400 a contract, and you took a full stop out. Write that down somewhere. Write that down somewhere. You were up from 97 to 75. You were up $400 again and took the stop out. Did you get filled on this one? You did. Okay, never mind. You did make money on this one. All right. I hope you ended up positive for the day. Rooting for you. How'd we do? Did they stop us out? I guess so. I don't even know where we got in. Oh, look at that. Bad stop placement. And then they went. All right. I'm going to show you what I see. What does that mean? The small, but that's, so what does the white paint bar here have to do with the small triggers getting through here, right? So Phil, this is your trade initiator. And I just want to make sure that I'm clear on this, that I'm not making a mistake. When the rules are met, hold on, when the rules are met, this bar initiates the trade, yes? Okay. So if the rules aren't met, and the rules aren't met, and the rules aren't met, is it really a white bar trade anymore? Or is it you just saying, I sure hope it goes down? Yeah, your rules aren't met. You jumped the fudge in hoping it went down because you saw this pattern. So the white paint bar, so rules are if then, right? So let me go through. If 15-minute term, then smalls below, then clear path, then white bar, then open below HVA. That's the rules, right? Didn't have that one. Didn't have that one, right? So you're missing all the rules to look for the white bar already. So what does that mean? That means you don't get a white bar trade, which means you either get an HVA trade, which never happened, or you find some little crazy momentum trade to continue. Does that make sense? The white bar trade is awesome when it sets up, but there's super specific rules to give you the highest chance of success. I'm glad it worked for you. Gap theory, weak bottom, and Jen says, that's just not my trade yet. Nice job, Miss Jen. I'm not knocking. I'm not beating you up, Phil. This is just what I see. There you go. Boaz, you did it better than me. You were there to get it. Well, why do we wait for the smalls to be below from the termination? It's a sign that the termination is more likely to hold, right? But you don't have that sign. You actually have odds favorable momentum going up, and they're starting to roll down, but they're directly into an area with all smalls above the large, right? This isn't a look of a top, and it worked out that way, that it was in fact a top. The same way, this isn't the look for a bottom over here. But when the smalls get above the large, you've got a better chance for the bottom. Does that make, that's kind of right in the moment. Wrong trigger look. Wrong trigger look. When you finally get the right triggers, that's where the edge comes in. That's where the advantage comes in. That's where the, okay, now things have shifted. You forced it. The fact that you started on the big chart helps. The fact that you waited for the white bar helps. I'm looking to see if there was a white bar with a close above, and I'm not even sure that there was before. But the triggers are an integral part of that trade for a reason. Because fighting that momentum, whoops, Boaz, I liked it so much I clicked it again. Fighting that momentum, it's just hard. And it's the small chart showing large chart change. The same way down here, if this is really going to be a bottom, these are going to roll first, right? These still all say down. But over here, we start to see change. We start to see the smalls break above the large. We see that the push, we see the fight, right? And now everything's coming in sync. And now that market can run up. Whereas opposed to over here, we never got that synchronization at the term, and they come back and retest. That's a pretty good example. So that's the Rinko version of what we just looked at on TradingView. And I think that is a very real part when you begin to incorporate stuff into your plan that's a little new, is trading almost the rules. Yeah, but you get bored, right? Today's been a boring. If you are a trader that likes to be active, today sucks. I'll just say it. It stinks because, man, they have been forcing patience today. They have been absolutely forcing patience today. Um, yeah, and all you want to do is make it back, huh, Aaron? And that's true. Process resilience. I like that. Um, you guys want to see something neat? We got about 10 minutes. Can I share secrets with you guys? So most of you are aware that my brother created the large chart automated system 6 months ago, maybe, whatever it was. Um, the small chart stuff is coming into play now. And let me get my strategy. Oh, when it crashed, it killed it. So this is going to be available for you guys in the next couple days. And hopefully within the next week, it will be available for, where's my ATM strategy? Each tick, trend trade, input series, parameters. Hopefully this will be available for you guys. There it is. To demo in the next couple days if you're interested. And what it is, guys, look at that. There's your signal. Odds favorable, clear path. So let me get it on the small chart. And what John Novak has done 99% of the heavy lifting, and I've given a little bit of input on, is small chart advantages recognition. Indicator instance found, only one is required. Okay. Let me get my template in real quick. And there's been a lot of work to be able to, let me get that going. And if we back up at 1150, rules weren't met. Oh, we got to enable it. Maybe they were. Transmit. Did it give an entry? It didn't give an entry. But when you go back and everything is solid on the large chart. There's one at 1136. Let's see. And my settings may not be right. Nope. Or maybe it just didn't give it. It's been a lot of sideways, which is cool. It's keeping you out of the sideways as well. 1121. Let's see. I may not have my settings right now. But man, we've had so much fun putting this together. When all the advantages are there, there's like a very specific, see, that should have been a signal. I've got to check my settings. But this is, it's freaking amazing, Morgan. I don't know if you've been watching in Traders Chat, but I am so stoked on this small chart performance and what it's doing. And it's literally taking trades, the way trades are taught in this room. You have a whole new account ready for it. So there's a good example. When the rules are met, if the rules are met here, it'll take an entry. It'll exit on second lower divergences and look for a new entry. It'll exit when large chart areas. It's crazy, and it's throwing all the things that we teach into that small chart. So if you already own it, you'll get a copy probably in the next day or two. If you don't own it yet, I think he's going to do a small window where you can purchase it, and then after that, it'll be lease only. So someone asked me the other day, he's like, okay, Mark, so is this for me, right? Is this for me? If you struggle with sitting still, if you struggle with letting emotions take over management, I feel like this is an amazing tool. And guys, I'm not a salesperson. This is just from having watched it come in. It's taking all those things that we struggle with as traders and pretty much automating it. And that's like, yeah, no kidding, Phil. It takes like 90% of the heavy lifting. And he asked me, so I can just turn it on and never worry about it, right? Make $1 million? Probably not. You're still going to want to watch it. Who leaves their finances in the hands of something? But man, sitting around, hanging out, I don't know. I'm stoked. I can't wait for it. I think it's going to be pretty freaking amazing. And the beta testers so far, and if you're not one of the beta testers, that's okay. But the beta testers so far are going absolutely gaga for it, which I love too. So good stuff. 2 triggers through, weak bottom, divergence, no trade again. Good job, Jen. They just can't figure it out, can they? Just can't figure it out. So I wanted to put that little teaser out there for you. Yes, well, Aaron, don't declare it in the room. Show us the picture. Show us the picture. Write your annotations on it. Did you take the trade that Jen avoided? With only 2 triggers through? With divergence from a weak bottom? No? Show me what you did. I don't have my ES opened anymore, so I can't see it. Boaz.